Good morning, guys. We're just watching for our reaction here at the middle of our range. Let me duplicate this, drag it over here so you guys can see. So we are currently battling our node that we built out over Globex, right? So we have this node here, a lot of volume. We've got our POC and our VWAP that we are hitting our heads into off of our previous pivot. So all we're doing right now is waiting to see if on this retest, right, from our previous buyer that was here, that pushed the market up, we then went sideways off the news. We are now at the middle at this node. We need to test if a seller pushes us down, right, to this node here, or if we can reclaim, right, build, and then push. I don't know which way we're going to go. We're literally in the middle. If you're not already in a long position, you are watching to see if sellers are going to keep this down, right? Do they now have control here at this 703.50, right out of this node? We need to see if this can build, right, and we start to build in this lower region and fail to get back into this range. If that's the case, then we look for a further push to the downside to fix some of this poor structure. If we can get back over, we can then look for the high of this range to start building out, right? It's either or. Right now, we just have this we are trading in a box. We had a look above, it failed. We have a look below into fresh liquidity, immediately found a buyer. Now you're at your seller. So now you're just waiting. That is all. Capiche? It's pretty simple. It's just a waiting game. Your first real pivot for directionality is, do we push below this 98 and kind of make this our resistance, right, to let us know that we're getting more downside. If this continues to hold, this blue box, and we continue to just kind of find buyers immediately as we push out of it, then nothing has changed, right? We're just still within this range and trading it. So that'll be your first sign of being like, oh, okay, we'll probably be looking lower, is off of this 698, right? Because it's going to be one of those things where we have been able to easily find this node, right? Which is the node that we're talking about, the 698. That's our node edge. And we've been able to easily find this node, right? These are two areas where we need to see price be able to hold above,
to close at a record high.
Or we're going to right, we're going to start to move down towards that next node. So if we can kind of like, sorry. If we follow the same like logic, right, you need to see a push below this, and then kind of the ability for sellers to then hold here, and that will lead to further downside. But like until then, you kind of have to just say, yes, this is where we are expecting, we can call this first buyer defense. Current range edge. Current battle pivot, right? This is where we are currently trading and where we need to get above or see acceptance below, which is what's happening right now. So like if we've identified these two areas, now we know what to be looking for. NQ. Let me duplicate those. NQ, just like look at your nodes, right? It's gonna be the same thing. Where got like a very clear box that price traded in, right? We broke out of it, with this kind of being your high and low, right? So we have a node that this was our current auction. This is what it was. We then were able to break and then hold the high of this, right? And we now see that we're now holding on every single push down into it. We're holding like the mid to high of this range. So now you are battling between this node and this range break retest. So what you want to see is how do we react here? Right, because this is, let me change this. Do we see that we want a bid to basically continue to maintain and be defended here? Buy first, buyer defense. You don't really have a short until we push below this, and then we see this as our seller. And then even then, you could just rotate around this price range until we see either a push back up or a push back down. But this is where you want to see that buyer. And we know that we've got a ton of liquidity that's been untested below us, right, by these yellow boxes off of our patty indicator. So we can fill this poor structure here if we do break below and show this as resistance. But like until then, right, like you have two ideas. We know that price traded in this range. So your ideas are, on this break of the range, we are then going to try to defend the high to then show that we have acceptance outside of this range, and this auction is no longer valid, right? Buyers are now willing to buy at where seller value was of these highs. If we accept that, and we're attempting that, right, now we have an area that we are willing to try off of, right? We're playing with these guys. Understanding that, like, if this plays below and this gets trapped, we will come back down to the low of this range. It is what it is. So you are looking for buyers to defend this high, and understanding that if we do fall below this node that we highlighted, right, this node, if we see seller acceptance below it, we will transfer, we will just rotate back down to the lows, because this is no longer buyer value, right? So you really want to see this defended here. And then your first battle above, right, is going to be VWAP, and then this node here. Delete this. Delete our chicken scratch. And what's great about ideas like this is that we don't actually need them to play out fully, in the sense of, like, we found liquidity here, that's the play, right? We want to see buyers step in here. We understand that this is our first risk off into this 1975, which is just VWAP. And then we just look for price to be able to hold here, so we can risk off one into our level, understanding that we found the buying support that we wanted, but now we need to just see if price can hold, right? It can be defended, and then we look for pushbacks back to the upside. But, like, you don't need a breakout to make money. If we understand where buyer value is, then we can just trade that to seller value, which is VWAP. And then all of a sudden we have a profitable trade. It's crazy. So we're coming back into that 98 area on ES. This will be important. See if we find a buyer here. That is going to show any sort of, like, aggressivity. Oops. Are we all, like, pretty familiar with this logic now at this point? Do we have any questions about, like, being on the upper, like, the mid, the high of a node, or the mid to low of the node, and how we expect price to react if we're, like, above or below the node, and then what we're looking for? Like, we're all kind of at the same page, and these paths make sense with how I've drawn them out with our node structure. Okay. Like, this is, like, the first real concept that you, like, I need you guys to be able to grasp. So if there are questions, like, this is the time. Sorry if I butchered any of that, right? It's pretty early in the morning still. Brain's at like 50%. We'll get there. We're warming up. It's pretty warm, man. Yeah, you got it. Morning, Vark. Kowalski is a Florida enjoyer. See what happens as the Russell and NQ come into this fresh liquidity yellow box as ES comes into that 98. Let's see if a strong bid steps in here. Ideally, right, like this is where you want to see buyers defend, but I could definitely see us get like a liquidity grab before kind of confirming. Need to see the Russell confirm a low. As of right now, these are just like scalps right at the bottom of our range. Reason why, again, if you're just kind of tuning in, is we know that this is a pivot. This is an area that we had marked for Monday and Tuesday as a target, and then we can see like that target playing out and then immediately looking for push above. So now we know like this is a previous selling level and where buyers tried. So like as we come down into this is an area that I care to see if buyers are still interested up here, or if we're going to need to come down further to fix some of this poor structure, or if this will be enough, right? This is why I care. So we saw price just basically oscillate above it for, I don't know, all night. So it's just like, okay, well, sure. Now let's see if on this retest, if buyers are willing to defend. If not, you know, this will kind of be your first area of being like, okay, we might need to come back down to 91 before we can get any sort of real upside, where these people are going to get trapped off sides, and then we get a push down, and then we can come back into this like 90-91 area. And that'll be where we'll be looking for like more aggressive longs to potentially be placed. But as of right now, like, there's really not much until we get these tests into these lows and see the move. You hate to see the market this slow this early. What news do we have today? That's early. I know we've got the FOMC crap, but what else? Anything we need to worry about? No? Doesn't look like it.
So the SEC had to force hedge funds and brokers to clear more treasury trades. So again, the SEC to hold a vote on new central clearing mandate on Wednesday, today, as the SEC had to force hedge funds and brokers to clear more treasury trades. Also in equities, Google offers enhanced generative AI tools for cloud customers. So seeing from the FASB even, crypto is to be measured at a fair value under new rules, as first US crypto accounting rules are to capture token highs and lows.
At a fair value.
Noting a little bit of strength in Bitcoin following this FASB release, as again, crypto is to be measured at a fair value under new FASB rules, and the first US crypto accounting rules are to capture token highs and lows.
Let me make this a bit simpler to follow. view up tests on the Russell and on Q. This is where you'd expect sellers to be if they were going to try to push the thing down again. It's your first little risk off. Yes, just sideways at R98. Delta getting a decent bid. A little bit of a push, but there's really not much to talk about here. The way that I'm, like I have my levels set up and are just basically like, are we holding above and finding buyers above the blue box, then we're going to come next to here, right? Like everything is just, are we holding below, then we come down. Until we see like a break and hold on either side, like this is just, I'm creating ranges basically that we trade in between. We just look for acceptance above or below. It's kind of how I view it. So like your first line in the sand here is like this 98. And if this 98 becomes resistance, we're going to have to look for a more aggressive push down into like 94s. And if 94s become resistant, right, then you're looking for that push down into this 91, 90 area. But like 98 is our first area that we've been talking about of where you want to see buyers like aggressively defend if they were going to hold this. Yeah, I can. There is the 3-pane. Yep. And like again, the reason why 98 is a good level to play off of is it's our ORL, it's our previous high, right? So like if we see sellers then kind of make that our offer for a push down, it'll be a nice sign. But until then, like we can play that as our edge low of the range until we see that dip below and then a seller step in to be like, hey, this is no longer buyer value, this is seller. And we're now going to hold and defend this on the offer. And as long as that happens, then we look for more downside to our next pivot. But until then, you have to kind of just play off of that this is where buyers are going to attempt to try. Doesn't mean that we get, you know, a huge move out of it, but it does mean that like your current oscillation is between these two levels. Which you can also just see with our indicator, like it says opening range low, opening range high. Now that these have formed, right, like these levels were here before our opening range had formed, but like it's the same concept. You can see that they're valid because of that. We have only been trading within this price for the last 15 minutes. Did I just delete? Oh. How is he down $1,000 already? if you're patient and waited for 98, right, this is your first risk off here into 70150 and VWAP. This is it. A couple points, just have to be patient. Not extraordinarily happy with it as of yet, but our 98 is holding. Need to see if we can get above this VWAP or if this will continue to be our sell level. I do not have the answer for you. Okay, here it is. First risk off if you bought 98 into our 70150. This is what we drew. Oops. Current range. NQ back to ORM here. You need to see a push over the 31, or this will be the high. You bought this area that we were talking about, right? This node. This is your first risk off. So NQ and ES both traded successfully in the areas that we wanted. Now we wait to see if we can get above or below, or if we continue to trade within the range that has been given. Again, until we see a break and hold above, right? This is, oops, this is the range. This is the range. This is the range. Is it communicated clearly enough? Blue to blue. Are you guys just watching that Top Step TV for like reset codes or what? I'm confused. Seems like a distraction, not a good distraction.
So confirmation now as the US Securities and Exchange Commission begins to a meeting to adopt new Treasury market rules.
I watched yesterday, just had it on in the background, and they didn't have a single good reason to take a trade at any point. I heard, whatever, just YOLO it. What's the worst can happen? I need a mentor. What are some other quotes? But like, I never heard like an explanation of why they were doing what they were doing. Such like, I don't know. It's just crazy to me. Crazy. I think if you're gonna watch anyone, I mean, other than me, right? What are those guys called? Trader TV isn't terrible. Those guys are okay. They just trade shares, though. I think if you needed to have a stream on just as like background noise, well, if like I wasn't streaming, that the guys over at Trader TV are fine. Because they're not trying to like sell you a product, and they're an actual like trading house. So I think they're okay. Some of them are decent traders. I don't know if you guys know who I'm talking about. But I'd much rather you guys watch that than Top Step TV. They have a good product, but that's about it. Did you guys play off of 98? Or am I talking to myself? Nice.
So we're looking now to the fear and greed index, 67 out of 100, which indicates greed, while the crypto fear and greed index is at 65 out of 100, which also indicates greed. We're keeping an eye on the VIX as well in early trade today, currently trading at 12.26, which is up around 1.5% since the open.
Yeah, I mean, I don't know how much movement we get before decision. I have no clue. This could be, like, the range on the day, right? Like, I... could be. Watches what happens into this 36 on NQ. So your Globex high coming into test now. As the Russell is holding below view up, and ES is coming into opening range high at our 703.50. This is basically where you're going to be looking to see if sellers are willing to push price down again. We can get a little bit more specific, a little bit more detailed about where we're going to be watching for that offer to be stacked, and that will be here in this imbalance. So if a seller was going to be aggressively trying to push price down, you'd be expecting it to be here, right? That's why we have this range labeled, zoned out. So you need to really see a push over this, kind of a build here, and then the ability to hold 706 for any sort of upside continuation, or we just can expect a seller to kind of be trying to offload here and some chop. So what happens is NQ pushes into Globex high now. Again, Russell flat. No movement.
In 10 minutes time now at the bottom of the hour, see the release of the weekly EIA inventories numbers. Crude oil inventories forecast sees a draw of 1.8 million on the prior draw of 4.632 million, with a range seeing a draw of 1.2 million to 3.318 million. Gasoline inventories forecast sees a build of 1.9 million on the prior build of 5.421 million. Distillates forecast sees a draw of 0.193 million on the prior build of 1.267 million. Accrued Cushing inventories, a prior read saw a build of 1.829 million. So keep in mind, did see the release of the private US API stock change numbers yesterday for crude oil. They did come in the draw of 2.349 million. So again, API crude came in at a draw of 2.349 million, which was lower than the expected draw of 1.5 million. So in 5 minutes time now, at the bottom of the hour, we see the release of the weekly EIA crude oil inventories. Forecast is a draw of 1.8 million on the prior draw of 4.632 million, the range of minus 1.2 million to minus 3.318 million. The gasoline inventories forecast sees a build of 1.2 million on the prior build of 5.421 million. Distillate inventories forecast sees a draw of 0.193 million on the prior build of 1.267 million. Also, inventories of crude in Cushing saw a prior build of 1.829 million.
You want to see buyers be able to defend this, right? This node. You want this to be of interest, and then you want to see a push and hold back over 31s for confirmation, or this will look to rotate back below this 26, back down to this 19. What's your thought process deciding to enter any trade based on these confluences? How much weight you put on high volume, low volume node? Can you explain your thought process, please? Yeah, I mean, it's how do I even begin to answer that question? I have a question regarding your pivot points and VP confluence. What's your thought process deciding to enter any trade based on these confluences? How much weight can you put on a high volume node, low volume node? Can you explain your thought process, please? So it's just one cog in the system, right? What you're looking for here is a area of interest where you are willing to put on risk. So if we can figure out where the volume, where participants have been trading with size, and then our reaction on either side of that area, right, either side of the other side of the node, right, so we can kind of look at it like this. This is our node. We saw a reaction above, and now we're looking at a reaction below. What we were waiting for is what happens on the retest of this area. Are we able to hold that bid on buy side and defend and then push off? Or are we looking and then seeing a rejection below? So like all we're doing is using it as a area of interest that we want to be considering taking trades around. Waiting, I don't know if I really get what you mean by that. Like I care about the area because that's where other people have been trading, and so like I guess it's of extreme importance to me because without
1 minute remaining,
understanding
the EIA crude oil
where
inventories.
people have been buying and selling, I don't really have any sort of edge, right? Like if we're considering the market an auction and I don't know where other people have been buying and selling and where that equilibrium is between buyers and sellers, which is kind of like your POC, right, where the most volume has been exchanged on either side. If I don't have that understanding of where people are trading and where they are finding value, then is there really anything to trade off of? You know, so like it's of extreme importance to me. But the problem starts to come in when you don't have an understanding of the time frame in which you're expecting your move.
10 seconds.
Or like the importance of this area on both, you know, the 1 second chart and the 2 hour chart, right? Because like the weight of the area, the importance of the area is going to have
A draw of 4 spot
incredible.
259 million, a draw of 4 spot 259 million. That's lower than the
Love this guy
expected
talk.
draw of 1 spot 8 million. Gasoline inventories, a build of 0 spot 409 million, build 0 spot 409 million, which is lower than the expected build of 1 spot 9 million. Distillate inventories, a build of 1 spot 494 million, 1 spot 494 million, which is larger than the expected draw of 0 spot 193 million. Crude Cushing inventories, a build of 1 spot 228 million, a build of 1 spot 228 million. Some strength in WTI crude following EIA inventories, a larger than expected storage draw.
Yeah, so like depending on what time frame and what you're expecting out of the trade, it can either be a entry mechanism, right, or it can be the trade itself. And what I mean by that is, if I'm looking for a trade to be in for a longer period of time, let's say an hour or two, and I'm considering this an area of importance or an area of value for buyers, do I care about getting wicked out here, or do I care about buyers being present here and showing themselves that they're willing to hold this node? What is the reason of why I've highlighted this area? Well, it's because we've seen a ton of participants here and their willingness to defend this level on a push above. So if I see buyers are willing, and on a 15-minute time frame, and we push below it a bit,
report on the feed for anyone
it doesn't
interested.
matter. It's the ability to close above and the willingness to defend it aggressively on every attempt into it. So if my idea is that I'm looking for buyer participants to hold this area, this is now a really great entry signal for me. But if I saw that we pushed below it and then rejected and started to build below, I would exit this position. So this went from being a short-term scalp to upside to now being our entry for a longer rotation up, right? Because we can play off of this, look for buys, and then trade back up to the high of this range and risk off and then have an entry. But like, until it is proven, until we see what we want, right? We see the reaction we're looking for, we are just looking at it as like a area where we want to see buyers or sellers react aggressively and hold, right? We want to see that our trade idea, our understanding of what's going on in the market holding up. So is it a reactive decision making? Yeah, I mean, it always will be reactive decision making, because we're not fortune tellers, right? It's all based off of how other people are reacting. The only thing that we can do as traders is find areas where we are seeing value being found, right? And then trading around that. And when we see those shifts of what we thought was perceived value, and we see a push below it aggressively or something like that, right? We need to then react and be like, oh, okay, oh shit, that wasn't what, we're clearly no longer respecting this level. I now need to watch this level of where I thought aggressive buying was going to take place as a level of interest on the way back up, to see if sellers will now maintain it, because that buyer is no longer there. They're unwilling to buy at that level. And so you can put initial size on, right? There's no reason to not try at a level of interest that you think is going to hold, but understanding that it's better off, if you don't see the reaction you're looking for, to just cut the trade and either look for a reversal or wait for it to do the thing that you wanted in the first place and then get back in.
So in a CNBC interview, US Treasury Secretary
really...
Yellen says turbulence in the job market has really settled down. No significant uptick in layoffs.
There's not really a great way to answer this without being like, why are you taking a trade if you don't have confidence in the area, or if you don't know why you're transacting there? It always kind of is going to come back down to that, which, people don't want to hear. They want
US Treasury Secretary Yellen says, I see a consistent pattern of inflation coming down over time.
They want this one simple trick to, make millions of dollars in a single day, like that exists. and they don't want to put in the work and figure out where like these probability zones are. It's just it's a very different way of looking at the market, and one is very juvenile, I think. But yeah, I don't know. I mean, like, you're either willing to buy the low, and if it goes lower, you're willing to exit and wait for another area, right? Like it is what it is. Yeah, I mean, that's one of the things, like, if we're trading in a system where we think that the market that there are real people buying and selling, right? And there's a rotation in which price kind of moves up and down, right? And we are transacting in between these nodes, and that the market's at rest while we're within a distribution, right? Within a node, and there's market in motion in between two auctions. And what I mean by that is, if we're following like these ideas here, which are like, we have an auction that takes place that creates a distribution that looks something similar to this, and then like what happens on either one of these edges, where price this is kind of what we would call seller value, right? This high, and this is what we would call buyer value at this low, right? At this tail low. And what happens when we have a shift where buyers are now willing to hold up here and then push out? Well, we then can have a market that starts to really gain some momentum, and that's when it's in motion, right? It's no longer at rest, where we're in a balanced period where we're trading between a known buyer value and a known seller value. And when we get that acceptance at a previous seller value, and then it's now shifted to that buyer value, that's when we can get momentum, and then we can then start to build out in a new area where sellers find value and then buyers find value, right? And then that's where you kind of get this idea of how the market rotates and moves, is the relationship between these two nodes. If we understand that all we're waiting for...
As U.S. Treasury Secretary Yellen expects inflation to continue to come down, sees inflation rates beginning with the numeral 2 by the end of next year.
If all we're waiting for is on the on a micro or like the larger scale, for buyers to push out of this known level and then show willingness to participate here, we can then expect price to push up, because we've now seen a shift of value. And so, like, if we're following that logic, we have a very clear area where we're willing to put on risk, because we know that if this doesn't hold and we don't see that aggressive buying up at these highs that we were expecting, that the market is going to rotate back down in this distribution, in this auction.
So again, U.S. Treasury Secretary Yellen says likely to reach inflation in the 2% range at the end of next year.
And like, if we can zoom out, we can then see like larger balances that we trade within, and you'll notice that like we just trade from balance to balance, right? That's just how markets work and how most things work. It's like you have people who are willing to buy and sell at certain levels, and we trade in that range until we see someone willing to push that spread, right? Push us out of that range and then hold us and look for higher.
U.S. Treasury Secretary Yellen says there are risks on the horizon, but doesn't see risk of a recession as particularly high.
There's really not much here until we see a hold now above 706. Got our hold of our 98s from that edge low. We're now back at the edge high. I'd love to see this now build out, the 706 to 703.50 area. And then we can go from, if we can get above the 706, we then look for that to then hold a bid for a push up to 709.25. But nice. That's a full rotation of the range that we talked about. But yeah, man, like I don't, there's not really like a simple, like the simplest way to talk about it is just like if it's an auction, right? And we have people who are willing to buy and sell at certain levels, and as long as we're respecting those levels and trading around it, we watch for reactions in those areas, right? And then we become reflexive off of what we see in those zones, and we don't really touch or care about anything until we kind of gravitate towards those areas of perceived value. And that's where we look to take trades, because from time over time, we've been able to see that there's a higher probability of a reaction at these edges. Not of success, right, but of a reaction at these edges, of these value areas. And then you can kind of create a trade plan around that, of what you're looking for. Like those are the different kinds of reactions. And so, like, we've been able to identify both different market and volume profile shapes and what those usually mean and represent, different reactions on in kind of like trade ideas of where price is most likely going to go on what happens into value, or on a push out of value and then a push back in, right? Like these are like pretty well-known ideas and things that we can then trade around. I really think that, yeah, I mean, it's just you have to kind of rewire your brain and get out of like the furu mindset of like this like hidden secret sauce, or like that there's like this system that they don't want you to know about, like ICT or Elliott wave. Like it's all just baloney. And like get out of that, like those. Like, yeah, it's gonna work sometimes, just like everything else. Right? If I put enough lines on my chart, we're going to get reactions at those levels. But it's the understanding of why we're looking for reactions at these levels, and then being able to path it out and, explain it 30 minutes in advance of why these paths are playing out and why we're looking for these reactions here. That is the difference. Right, like if all I'm doing is labeling where value is on the micro and macro, right? Like that's what matters, and then we just watch for reactions there, and we ignore everything in between. I have no care in the world where we go on like the larger time frame. It's just these, if we can understand how markets rotate, we can then take advantage and trade those rotations. If you're a newer follower, but like there's multiple live streams of me trading crypto with nothing more than just a anchored VWAP and a ruler of halfway backs, and it's just me predicting where the market is going to go on a 1 minute chart just by measuring halfway backs and then trading off of it for like 5 hours. And it's just probabilities. Like, are we making higher lows still? Okay, well then here's like your probabilities of like what price is going to do in a buying market with momentum. Okay, well do we push below it? Okay, well then this is what we're going to be looking for on a pullback. But I really, like, I highly, 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 highly recommend you guys like take a look at this blog. He's gone into everything you need to know for like getting a grasp of auction market theory, how profiles work, the general ideas around it. It's a great learning tool. There's so much great info on here that has no bullshit, no trademarked secret technique. right? There's no like there's no nonsense new strategy with the shadow pivot. You know, like there's no nonsense. There's nothing that's like. He's just trading. He's just a guy who's a professional pit trader who now gives out resources and is teaching you auction market theory. There's no gimmick. And that's how it should be. Yeah, no moon cycles, no what's ICT's thing? What's in the machine? What's the single algo that controls the world? Like just shut up. No crisscross WXYZ wave 2 correction rotation 3. Like just like we're just trading node to node, man. Enigma, yeah. Like, there's a reason why I can call the low on, like, almost a daily basis getting on. And it's just like, oh, well, we're just risking at the lows, right? Like, the 998 to this 700. It's a 2-point range that we were able to identify and then play off of. And it's like, either this is the bottom, or we're going to look for this to become resistance. And then we play for more downside. Until then, like, we call this the low, and we play back up to the high. And, like, that's that. Like, it's not... There's no rocket science. It's just an area where if I want to be putting risk onto the long side, I want to be putting it on here because I know if we push below this, we're going to get further downside. I'm putting risk on as close as possible to my invalidation of a bullish move. Either bulls hold here or it's over. And to me, that's super important because now I can skew my risk to reward. I'm not trying to buy in the middle of a range. I'm buying at the edge of where perceived value is. And either that you know, the current auction shifts, right, and we get a push below, or we just bought the low where everyone else was trying to short. And now we get a full free rotation back up to the highs. I mean, I'm just sorry. I'm like half asleep, CJ. So I'm so done with it all, man. I just want people to make money. I don't know. Some people might think I'm like personally attacking them. It's whatever. I just see too many people like coming up with like the most nonsensical things, and people just believe it. I just don't get it. I just asked how you were, man. Dude, this is true. I don't know. I mean, trade whatever system you want, you know? But, like, if you can't give me rational reasons
U.S. Treasury
live
Secretary Yellen says the Biden
and show
administration
me
is
that
likely
you
to
make money
revive
off of
proposals
it,
for higher corporate tax rates
then I
next
don't
year.
care about your opinion. Right? Like, if you can't show to me that you make money and you can do it live and not hindsight trade and, like, none of, like, it just, like, you have no opinion. It's that simple. So we're up at our high now, and we're starting to see NQ lead down. You really need to see a buyer step in here on NQ to maintain this equal low. If this starts to really push down and we see a shift where 36 is now our offer, right, off of this node on this push on a retest, then we can look for a push down that's a little bit more aggressive down into this. This is a very important area where we're going to need to see an aggressive bid, an attempt from buyers to maintain on a push below. You want to see an aggressive move up, and then a recovery of this node, or again, this will shift down to VWAP. So you'll be watching this white box here and seeing if we can easily recover this area and then get back over Globex high, or this will be where our reoffer is for a shift down. So look for this buy here. This is kind of your last attempt on buyers here on NQ. Good reaction so far. But you do need to see us back over
US Treasury
this
Secretary
36.
Yellen says the Middle East war has the potential to affect the global economy if it expands.
What a... yeah, clearly. Yeah, and this 906 on 906.1 is a good area reference point for the Russell. I have this 906.1 to 907.5 is our kind of like top of range here. You'd want to see this area build out, or we're easily can get a dip back down into this Globex VWAP down at 904.7. And then we look for basically a point like this, or we just shift right back down into the low of this range. So here's your real test now that NQ's gotten its bounce from that liquidity at 28 to 30. We're now looking into that 36. This is where you'd expect that seller to be if they were going to try to continue these lower highs down. You want to see a push above this 36 to 38.50 on NQ, and then for that to then hold as a strong bid on a look above, just as we have drawn here, or this will be resistance. And then you look for that 31 to kind of push price down into VWAP again. I will be right back.
Oil futures extend gains with Brent crude up by $1 a barrel.
Alright, apologies. So all I'm really looking for here is for 76 to bid on ES on this retest as we have drawn. This is an important level where we see buyers now will show willingness to hold off of a previous resistance as NQ comes back into VWAP as our test. So let's see if we get a strong bid here as NQ now pushes into VWAP and ES pushes into 76. Russell's fine. It's holding. High of the range. It's good. As NQ and ES are retesting a vital area. Don't really care. As long as the Russell's holding a higher lows, that's dope. Now we're just doing a rotation down on NQ and ES to validate the move. Really nice reaction off of NQ VWAP. This is your first risk off if you bought that. I have 2 contracts left. 2 left here. Just buying. We were looking for a reaction into 7706 on ES, into our VWAP, mean reverting. Got our hold of the Russell, you get your push, and then continuation. How does he do it? I'm just waiting for where value is, and then attempting it. Crazy. And like, I don't care if it doesn't break back over 36. We just gotta trade. We bought the edge. Now we're back up to see if the seller is going to aggressively push this down again. You know, like but who cares? We're in already. We've already taken profit. Now we're in a runner at the low. Right? Like that's what you want to be. That's how you want to be positioned. Risk free. And now, like, the same pathing is applicable on this pushback up. Like, we need to see this 36 to 38.50 become supportive for any further continuation up, or this is just your range. Right? Like, look left. We understand that this is where our seller is located. We can see it visually. We need to see a reclaim of this area to show that this seller's gone, so that we can push back up to the seller up here. Because if this seller isn't here anymore and this becomes buyer value, then all of a sudden we're trading between this guy up at 47s and this guy at 38s, right? You're now rotating in between these 2 points. Alright, what did I miss in chat? Great job, CJ. Russell's still holding, looks good. What's the background music track title on repeat? I listen to this playlist that is 24 hours long so that I don't have to choose. And here's a link. Big fan of the cello. I don't know if that's what you were asking, but there you go. Plus side of this playlist is that they're willing to profit share the 50 cents that I'll make on this stream and not take the stream down. Love that for me and for them. True, Vark. It's, I feel so betrayed. I hope he appreciates the 2 cents. Hope it was worth it, Ty. So here we are. Here's our test into that 38.50. We want to see a look above here, and then the ability to kind of like build this out, or this will be our high. We want to see a flag to kind of develop here off of this test, and then buyers' willingness to show a hold of this Globex high at this 36 now, this push up, and then we can come up into the trade into those 50s. I have 1 contract left. Here, I will put it there. Back to 30s. Yeah, it's possible. I think you just get a little bit of chop here. Ideally, 36s hold. A look below on 36, then you get your 30. Easy. If that stays offer. I'm gonna just not be an asshole and just make this 50. Yeah, so again, like until we see a push and hold above this, right, on a look above, and then the ability to pop, like we need to respect this as our seller. So all we're looking for is for this move above and then the hold. Or this will continue to be where our seller is located. As long as we're maintaining higher lows, I'm willing to hold a runner because we are in at the low. So our risk is minimal. We've already risked off. We're seeing higher lows. So there's no reason to exit this position until this buyer exits, because then we can probably get another entry at the low. So as long as we're maintaining, right, I'm willing to hold a runner for a potential higher price, as long as like ES and the Russell are showing a similar behavior. Definitely a little bit of weakness here, but we understand that that's where that seller is, and all I'm looking for is for a potential pop above and then hold. So yep. Yeah, it is, Kamo. It's a great trade. And that's why we say to create a playbook of trades that just make sense, right? A trades, B trades, C trades, label them, and then figure out which ones actually have success. Because if you're just watching stream and you're getting like a ton of FOMO and you don't have trades planned out of like things that you're comfortable taking, right, then you have like no idea what actually is working for you, and you're going to end up taking bad trades and then not having the mental or monetary, you know, capital left when those solid trades that you are comfortable taking actually appear. You'll already be like completely out of it. That's why that playbook is so huge. Dave Portnoy. True. Greatest trader of our time. Are we looking for a bid again at this, I don't know, 704, 705 area, then a push back over 706 and rebid off? Just at the bottom of our range. Watch, see what our reaction here is into Russell VWAP, waiting for that to find a low for a confirmation that we'll get these breakouts. None of this price action really matters. We're just at the highs. Doesn't really affect us. NQ definitely lagging, right? But Russell holding. Yes, holding. Really only care about this like 706 to 703.50 area. God, delete all this nonsense. We can talk about this. Go 1 minute. If we look at the market like this, does it make sense why I've highlighted these areas of interest of where we're looking to take trades? This green box and this red box. Like if you just take a step back and use your brain. Like this is our distribution. This is our current range we're trading within, right? So until we see a push below this and then willingness to hold, we know that we should be trying to transact here. Or looking for that look below and then for this to become resistant. And then it's like, okay, well, where are we going to trade into? Well, probably into this, right? So like now you have a trade plan where either this is your low that you're attempting or you're looking for this look below, and then for sellers to aggressively defend this for a push back down into here. So now you have a target below, a pivot, and a price target above, and the willingness to participate here waiting for a reaction, right? Like this is your low until proven otherwise. So now you have a trade plan in both directions with pivots marked. With understanding if buyer value shifts from this green box, we will push down to this green box. And if seller value shifts from this red box, we will shift up to this red box, right? And now we just watch these areas and be flexible. See if sellers are willing to defend this now and that push back up. So you're looking for a lower high to be able to be maintained. Now we've pushed below our previous buyer. The same trade we took on Monday, where you're like looking for the previous buyer to now be offsides and the seller to now aggressively defend this level as resistance. And like you can be willing to take this trade as long as we are holding below. If we push back up and then bid off of it, then you need to reverse your position because we'll be trading back up into this edge. Right, so you would just understand your risk, and like if we start to see something you're not comfy in, right? Like a push above this level and then hold, and you just close. Like a 1.5 of risk. RTY still looks fine. Need to see ES be able to hold opening range high and push back over the 706, or we'll get that move down. You see what I mean? Now we're just trying to build acceptance below these buyers that are here to the left. And if we do that, right, then we'll get that move down again. This is your first area where you're looking for buyers to try, right? We need to see sellers willing to now just hold this area. Chop, chop, chop. But we can look left and be like, oh, okay, well, this is where our buying base was, right? And so this is your first attempt where these wicks... I need to just delete some stuff. Here. We see this was our high before. And then we got our breakout. So like now this is your level for your first risk off. You're looking to see if price builds here and finds acceptance. I'm deleting all of this. There we go. You're waiting to see if price now, from this retest of these lows, if on bounce, we now kind of build here and are able to then look for a push down, or if this is enough of a retest from buy side, to now push price back over and then kind of pop us back up into the mid here. But like if we're willing to play off of this shift up at like 22 basically, then regardless we are profitable in the short back down into this, and we have like a 1.5 of risk from that position where now you're just like in a free trade and you can have a runner that can get stopped and it's not a big deal. Just being able to notice that shift. Here, maybe go down to a smaller time frame so it's the same as the other chart. Oops. Like nothing's invalidated with this, and like your invalidation is the push and hold back over that VWAP. Like we know what we're looking for, and we know that we're looking for the seller to now try to represent themselves here, to be positioned here. and you know that you're looking for this to basically just chop and for a seller to then hold this. But if like we push back up, this seller fails to make these new lows, right, then this will become a buying area, and we will get the pop to fill the structure here back up to this. So you will now have like a risk profile and targets above and below of where you're looking. See what happens as the Russell comes back down into VWAP. Yeah, I mean, like, what is, like, flow is going to be all over the place. It's interest rate decision today. Market's not going anywhere, doing anything. So first risk off here, if you're shorting off of 22s on NQ, as the Russell pushes down into VWAP, it's your first risk off. Until we see this break below and a willingness to then kind of like go for that continuation, just mark this as your low. Again, I've already established this by saying that this is where you're expecting chop. Just looking to see if sellers are able to now hold us below VWAP. But I'm very curious to see if the Russell is able to get a reaction here off of our ORM and VWAP. Yeah, you don't need a ton of movement to day trade.
Apple is set to be hit by EU antitrust order in the fight with Spotify.
You know, sometimes, like, that's a better trade. As long as there's liquidity, you can day trade it in a range that's been established. You're just buying the edges of a range and selling the other edge. You don't need momentum to have a day trade. This is a great environment to day trade if you understand where you need to be risking on and off and what we're looking for. If all you're looking for is breakouts or breakdowns out of a range, you're going to have a really bad time. You're going to always be on the wrong side of the trade. Surely, if you've been listening to me or following along for multiple days, you can see that we can easily trade this. We haven't had a losing day since I started streaming. Well, you're gonna have a horrible time trying to do SPY 0 DTEs and not be, if you're trying to buy them and not sell them in a ranging market. You're kind of like shooting yourself in the foot, understanding that we're in an environment that we're chopping, and then you're trying to buy contracts that are looking for volatility. Like, you're actually hurting yourself. Right, like you would easily just be selling that out of the money contract if you understand that we're in a ranging environment. This is target. Risking off here. 2 left. One left. Break even stop. GG's. Literally the same trade that we took on Monday. With the buyer turns to seller. Look to see if it now holds. Push down. See if we get a strong buy now. Back at our base. Hopefully people were able to follow that trade. Like the understanding the thought process and all, you know, blah 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 blah. Go back to our higher time frame one that we pathed this thing out. There it is. You're out of the market right now? Yeah. I think that's fine. You just wanna, like, there, and the thing is like, there are plenty of things that still have momentum. Right, so you can trade those kind of things, or you can just learn how to trade in this environment. Right, sometimes it's better to be the seller, not the buyer. Just fine. And options give you the flexibility to be able to position that way. Futures as well, if you want to just day trade, like they're leveraged just like options. So there's you can make decent money on very short-term positions. So what we're looking for now for any sort of continuation is just like we were looking for here at this 19 to like 22 area, right? Is a push below the ability to hold opening range low, this green box, as resistance, and then a push down into this liquidity. Right, that's your first like attempt. And we will look for that reaction here at the edge of this FEG. We understand that this is our buyer, our range low, where these buyers have been present. But if we push down, me just stop trying to draw these with crayons and do a pathing for you. We look for our initial reaction into this 95s off of the high of this imbalance. We watch to see that this green box is now resistance. We look for a push below, a fill, right, to our mid, a push down into the lows, and then we watch our reaction. Either we get a bounce here at the low of our imbalance, or this becomes a resistance for a further continuation down. And then from here, your pathing is just, do we resist there or pop back up to the highs? So you're watching for a buyer to be present here, and then looking for shorts to try to load into this if you're looking for downside continuation. Until then, this is where we called out our buy earlier in the day, so you need to respect that there are people positioning here at this range low over and over and over and over and over again, right? So we need to see that look below and then watch for a reaction there. But this 595.50 will be a really great test to see if there's a any sort of liquidity there. If this is just fine to buy. And just to give you like a zoomed out of what we were looking for on the day on ES, you see how this is just our retest of acceptance above this pivot. This 703 to 706. We're looking for buyers to be present here for upside. Do you remember that this is the range that we were trading before when we called 98 as the low? And then traded up to 703. So now all you're doing is on the other side of this node, we're looking to see if we can hold here or a push out. What happens if we fail? Well, it's the same trade again, which is a push below, and then we look for this 703 on a push and then a retest to trade the range back down. But like all we're doing right now is just trying to find acceptance here. Do we understand that? Like that's what this is? Yeah. Like we don't try to make a trade something that it isn't. We don't try to make a zone something that it isn't. This is your first buyer defense until it isn't. Until we see the push below and then this become our offer. Like you do not, your pathways, your idea doesn't affect the market. And so you need to accept where current participants who actually have liquidity and can move the market are positioned. And until you see a shift in their position, you respect them as your pivots. No one cares about your lines. Your lots don't matter, Gab. I'm sorry, bud. That's a pinnable tweet if I ever saw one, Rory. Your one lot of M and Q doesn't matter to anyone? I mean, it matters to me, man, but, you know. My wine magnet doesn't work. I mean, hey, it could work. You know, you could be. It's, as long as you're highlighting where other people are finding value, right? Like that line could be important. Yeah, no, I know, CJ. So this isn't going to be valid until we see a pushback over 706 for ES. But again, just remember, this is like where we want to see buyers try to defend. This is where your sellers were previously, where buyers then attempted on the breakout. So this is where you want to see them try to hold, right? And now you want to see off this test of the 706 on the push above a bid and then attempt, right? Or this will just kind of chop around until we see a direction decided on either end. And all we're doing here is, again, just rotating between our zones, right? Like this is literally the trade, like that we, hopefully you guys know what I'm talking about, what I'm referencing. That break below, and then the push down, and then our risk off being like where your best opportunity was to go long. This is where I took shorts off and Aram added to a position and then risked off back into this pivot. And then he shorted again because we know a seller is here. You guys remember that? Hopefully. But like, this is just your range high now until we see acceptance back above. Let me just move this over. So many horrible drawings today. It's out of hand. It feels like a money glitch. Welcome. Welcome to the stream. I'm glad you're sticking around, Mohammed. Glad to see you here multiple days in a row. Here's your 706 test on ES. UOP test on NQ. Rory. You missed the short because of your shit posting in YouTube chat? Yep. True. I saw it. Right back down. Crazy. Now, if only we could get, like, a 20th or a 10th of the audience that those guys at Top Step TV have. Let's just, like, bring some of those guys over, you know? And make some people some money. Bro, I'm not going on Top Step TV. You're funny. I've already been invited. I'm not going on to there. Holy. What am I gonna say? How do I respond to them asking questions? Without,
the SEC,
BMing
Votes
them.
4-1 to adopt new central
I
clearing
can't.
rules for $26 trillion US Treasury market.
I'm witnessing some actual bot behavior. Ooh. There's actually potential. That's scary. Let me go look at RTY. I don't know why I'm so tired today. This sucks. I wasn't even like on that late, man. I got like an hour of sleep though after we got off. I guess that's the problem. See, really, the problem is that I didn't stay up and grind. I just wasted my time. I would have been just as tired, but now I have 0 of the dark matter that I could have been farming. See, Roy? It's an issue. Good morning, Sauce. Yeah, there's been a couple decent trades, but we're just in the same range as the open. I'm so excited to be able to play this game with you, Varg. Are you ready to quit and go play Warframe with me? That's, yeah. Again, I have one runner on. I need a really cool UI like Top Step so that I can keep track of our profit loss in our current position. That scrolls across, that'll make me look legit, you know? I mean, I can make myself that. I don't think Sam could. But that would require me to spend time on something that I don't care about. Which is just asking so much.
NATO increases the military budget to 2.03 billion euros, which is a 12% increase over 2023.
So again, this is your risk off until we see a look below the 600, and then we watch to see what happens at this 95, 50, 95-ish area. And then what we're watching for is this to then become resistance. Let me make this a red box. Yeah, look at that. Big. On our retest after a push into this area. And then you need to see if this FEG edge is enough liquidity to push us back in, or if this will lead down to this fill. Until then, this green box is our buyer defense and bottom of this range. Yeah, dude, this is between like Mario and I, like we live our lives specifically in the way that we do, so that we don't have to do that nonsense. It's, like it is what it is, man. There are two things that I am really uncomfortable. No, never mind. I'm just moving this over until we break below. Until then, this is just an idea. Is that the trading competition, Ty? Dude, that's gotta be so stressful. Can't even imagine. I need someone to like... the secret sign up is the exact way to play it. Like, I just need to never be aware that I'm in it. And then I'd be fine. But that is so much pressure to be under. Like, people scrutinizing every single one of your positions and you like having like, ugh, just sounds terrible. Like, way to take something you love and then make it like toxic. But as long as I like didn't know it was happening, I think it'd be fine. But I don't know if my anxiety could like, I remember trying to do this with the options, dude, with the Excel sheet with all of like my CSVs and like auto updating and like posting my live entries and exits, and like I've never felt worse about myself, and like the amount of stress that it was going under was so not worth. The live tracker was just abysmal for my health. The DMs that I'd get and be like, I saw that you entered this position that was clearly marked as a scalp, but I put my entire account in it, and what do I do now? And it's like, bro, like, what? Like, what do you want me to say? Like, there was nothing more stressful than having to track and manage those trades for other people. That was the worst experience. Do we see VWAP? I don't know. Maybe. Let's go look at what Russell's doing. We're at liquidity here, so we'll see in a second. We're just maintaining lower highs, right? So seller in control, just actual channel down until the Russell finds a low. I think that you just probably get continuation. Could easily give VWAP again, but as of right now, ES really needs to hold here. We need to see that bid over that 706, or this will look for that push down, I think. See what the Russell does, if this is enough of a test, or if we're gonna have to come down to like that 98 level. No real clear signal as of yet, with Delta still pushing down. No flattening, right? No basing kind of happening as of yet. Just chopping. I feel like I've been like really off topic today. Sorry about that. Exhausted. feel like we're about to get a bigger move. Yeah, I think so. I mean, it makes sense, right? Like, we're gonna either show that sellers fail, right, at the lows, attempting to get us out, and then we can punish them above. Or we'll get that acceptance below, and then we'll get that larger move down to fix this poor structure, I think. Yeah, so I think 580s is a good first target, right? That's what we have for the FEG fill. Or a push, what are you saying, 620, 75? Yeah, right, we're back up to this node high. Yeah, I think those are both great areas to look for. And we should get that understanding if we'll go for that that 580 if we get this rejection on a push below. Yeah. I think at this point, all we're really looking for here for the upside test is for the ability to, we're going to look for a push up into this 20, but that's not going to be the actual entry. It'll be a push back down into this 13, and then a strong bid to step in here, and then we get the pop, and then we can trade this back up to this high. Because what will this represent? Well, we know that this will be where risk off is being taken for people who are just buying and selling this current auction, right? Like, this is where liquidity will be found, and people will risk off from these lows. But what will be important is the recovery of this buyer right here at this 1325. So if we like just bring that over, that will be that retest of that higher low from this basing. That'll be important for me, and that'll be my entry for a long if we do see a buyer attempt there. Yeah, I mean, it's not a bad place to get a little celebration in. Especially midday, right? Like, we don't want to expect too much at 12 Eastern. It's when all the liquidity dries up. Buy your $12 Starbucks coffee. Take a break. I'm glad that I'm forcing all of you guys to listen to classical music. Hopefully it's helping you with your trading, staying calm. It's maybe Gorodo has to be muted on YouTube. Do you guys have the YouTube stream muted and then you're just listening to me on Discord? Understandable. Wow. See, this is why if you didn't have it muted, right? Think of how much more profitable you could be. Okay, CJ, are you secretly Tatum? What are you listening to? What is this? Cute and sweet, upbeat kawaii music, 2019. Huge. Big alpha. Did you look at that song I linked in the music channel, by the way? Rory Orvarg. Yeah, man. When are we going to go? I mean, I love that song too, but this is the actual live version of them playing it. So far, we haven't had that. No, yeah, no, it's like the song's been out for forever. That specific thing I just linked came out the day I linked it. Hello? That'll be the first time that we hang out. We'll be at that show. Yeah, man. Yeah, there's no chance you're getting that. I'm just so excited that they finally like got a live music video going, because I've been listening to the fan-made montage of the two songs mashed together on YouTube for the last 2 years. So I was very excited to actually have an official version. I need a cam of Flex looking at that song and watching it live. I need the live reaction video of all of the people that are like 40 plus in chat. I need to see it's Flex. I'm not linking it here. Here, I'll tag you. Flex. The last time I linked you some Japanese metal, you weren't ready for it. There's your first test into that 95.50 that we were looking for. See if buyers are willing to try to push this back up. You now want to be watching this 600 to 606 as your reoffer, right? So we'll be watching this now on a push. You want to see sellers now defend this, right? This now stay on the offer. This is just a buyers have now flipped to potentially sellers, right? That's it. Buyer value is now we're now looking to see if this is now a flip to seller value. It's all this trade is that we've been highlighting. It doesn't need to come back up this high. All we are pointing out is that this is that reference point where we are looking for buyers to first attempt at this 95.50, right? And now on this reoffer into this red box, you're looking for a strong seller to try to step in and hold price below. And if they do that, then we will look for that continuation and a push down, right? So if you are unwilling to attempt in this red box, then you're going to be looking for a push below this 95.50 and then looking for that to then become resistance, because if this becomes resistance, then we know that we can traverse back down into this imbalance down into the lows and then look for a fill and then figure out direction after that. Hopefully I've like written this out to a point where like you can easily digest it and follow along. Trying to keep this clean. Yeah, at least your first attempt. We'll see. I think you can probably get it again. If not, then you just look for what happens into the 590, right? Like nothing has changed. You definitely like missed your first reaction, but all we're looking for now is on this look below, do sellers show acceptance, right? Do they find acceptance below now? And can they build here for that push down? Just like we saw here, right? Like you definitely got your first opportunity into this 20, but like we still like built here for a second before we got the aggressive move down. And so you get like multiple opportunities in these kind of areas a lot of the times. But that's also like going back to what we were talking about earlier in the day. It's like, is your trade that we just wick into that 600 and immediately sell, or are you willing to put risk on short-wise in that general area, right? Because as long as we're holding there, right, and respecting that box, then the short trade hasn't invalidated. Like, all you're looking for is sellers to be able to hold that area. And until we can build above that 606 and build off of it, like, the short is valid for the push down. So because you missed your to the tick single entry, is the trade not worth playing now? I don't know. It's up to you. I don't know. But like, it's something to think about, you know? Because we have a shift in our auction with this no longer holding as the low. So like, is it worth you not taking the risk in a 6-point range on NQ? I don't know. You'll have to figure that out for yourself. That's your first risk off here, though, into the mid of this FEG. Mark this. Is our next pivot right here. And it's fine, like, if you're not willing, but, like, it's just about, like, understanding, like, what does it mean that we lost that 600? And what does it mean if, like, we see seller acceptance below that 600 to 606, where we saw buyers previously holding that and defending it, like, pretty aggressively? Like, what does that mean for the auction itself? And am I willing to take a trade on that alone, right? Or do I need a very specific entry based off of what we're seeing on the DOM, right? And either are valid. It's just two different kinds of trades, but both lead to the same price action. It's just one you had to like visually witness on the DOM on that reoffer, and the other is just understanding structurally, right? It's like a structural trade or an auction-based trade off of how we're like our reactions on the DOM itself. Both are valid and both are fine. Like there isn't one that's right or wrong. It's just it gives you like an opportunity to, if you miss that reoffer, to still like have validity in the trade, I guess. Right, like, should I... Here, we talked about this 22 level. 22 to this, like, 19. Should I have closed my short because we wicked over this 22 level that I cared about for all of 1 second on this push back into it? Or am I fine being in, you know, a couple ticks of drawdown for a couple seconds, waiting to see our reaction from our seller into that area? Right? Like, should I have gotten stopped out there and then have not followed in this move and had a runner because we wicked over for a second? Or was I fine putting risk on multiple contracts and averaging into this area until I saw a push above and then the ability to hold and bid this level for a push up? What's your invalidation? Is it the level itself or the reaction at that level, right, afterwards? For me, this is why I don't use stops like that. I have mental stops because I'm watching to see our reactions once we get there. And if I saw the bid lift to this level and then defend it on this push above, I would have exited the short. But until then, like, I'm watching for sellers to aggressively push this price down on attempts into it. So all of a sudden, where you're getting stopped out is where I'm looking for sellers to be most active and push price. So like you're actually like missing out on your best opportunity to get into the short itself, because you're so focused on the individual price level and not the reaction from participants. If that makes sense. And so like on this retest here from this buy side liquidity, you need to see a look back below the 600 and then a strong rejection for this to be valid. Or a push back above the 606.25 and the ability to then see that bid lift, or you're just stuck in this perma chop again until we decide. I need a nap, man. Holy. Yeah, I put eye drops in twice so far today, kids. Bad. That's just unfortunate. That's such a waste. Expensive stuff, man. Okay, CJ. Yeah, we'll see. They're definitely attempting. I am not convinced on either way yet. I would need to see like a strong look above on NQ for me to believe this is bullish. But I mean that's fine. Like the rebid off of 95.50 was great for a pushback up to this, but now we're just at our seller again. Need to see a pushback over like 610, and then for that to bid for me to think that we go back up to like VWAP on NQ. Russell definitely attempting to find a low though. I like that delta is kind of flattened. But I think like if you had to like gun to your head which way, like your only area, like this is a short until we see a push higher and then a bit off. Like it just is what it is. Like you need to see, here, let me go to, let me turn indicators on. Like, are you longing into this node? No, it's a short. Like, be real with yourself. The long was here, where we risked off into ETH low, right? Or the rebid on the push up, and then the hold of 95.50. Now this is your risk off for longs. So if you're trying to buy a long here, you're just FOMO trading in. What you need to see now is either you're putting risk on for a short, for a pushback down, or you're waiting for a look above, the ability to then hold this, and then pop back up to view up. Right, so this is your entry. Here is just no man's land or a short, looking for downside. Hopefully that makes sense in like the broader context of like looking and seeing that there's like a node directly above us and that this has been our seller pivot. Right, like we identified where the buy side liquidity was. So if you didn't enter there or you didn't risk off your short there, now you're just looking for a FOMO entry at our seller reoffer on this node. So now you need to see the look above, a strong bid off of where previous sellers were for a push, and then a rotation back up to view up. Or this will just rotate down and trap you looking for that breakout trade. Hopefully the logic I just applied there makes sense to you guys. I think a lot of you would normally look for that as a long, but it's like just so clearly a short. Like if you just zoom out. Jeez. Morning, Izzy. Watch what happens as the Russell comes into this low. At 98, that's what we were looking for like an hour ago. Yeah, that huge low tick a day at negative 500. What a banger. Yeah, man. Super eventful day, as you can tell. So stupid. Pack it up, boys. Downside down to 94. Yeah, I think that's fine. Just watch what happens at 98 and then see if it rejects ORL. You got ADR down at 90s, so we'll see. Just waiting to see what happens here. Is this enough of an area where we can like bid? Or do we need to push and then go for that continuation? I don't know. Trying to like maintain this. Here, let me delete some of these and then try to clean this up like we did for the last one. We know our node is here. There isn't a buy until this becomes supportive, or you bought here into buy side liquidity. Now you're in no man's land with an idea that we are looking for a short continuation from either the rejection here or a push below here. Right? Like this is resistance. We can see it. Which is why you're not looking for... God. Move this over again. All right, there we go. Cleaned up. You love to see it. Are there any questions about the pathing that I have, or are we like all on the same page here? Oh, I can finally move this over. Hell yeah. Same trade again. Does this now hold as our reoffer? And what happens here at this 95.50? Your pivot, just as before, is can we hold below, or on a retest and push above, does this become supportive or push back in? Right, it's the same shit as before. I've just been sitting in this 21 short watching this, so yeah. I'm not diddling down here. Twelves is good. 12s is just the secondary entry. I think that's great. 12s made complete sense, right? Like that's you had only one option there, which was short the node. Like it is what it is. That's why I was trying to be very specific. Like there's no long there until we see the push above. This is your first risk off here in the 95.50. You're now looking to see if buyers are willing to hold this again on retest for a higher low. And now we look for an aggressive seller to hold this red box that I have as your offer. Yep. Easy short. So again, now this is where you want to see sellers try to defend. We understand that buy-side liquidity is here. Hopefully no one got caught trying to play this breakout as I was talking about it. Again, there's nothing here until we see that push above and hold of this node. Now you just need to see what happens on this push down. Oops. And we want to see if our offer now sits here, and that is we're going to look for continuation on a push below that 95.50. Until then, this is it. This is the new range, right? Like it is what it is. please guys, if you have questions or like want to like understand my thought process in a little bit more depth, if what I have written doesn't make sense, like this is your time to ask. Like, do yourself where was I going with that? Yeah, like you know, like if you don't understand something, like this is the time, right? Like do yourself the self-service of like getting your questions asked in the moment instead of waiting until you're on the wrong side of a trade and you know it's too late. This is your push back down into our same target as before, into this 90s, off of that rejection and push. Hopefully, like, that's, you can see that now playing out, why we cared about this 95.50, the re-offer from where our previous buyers were, for that rejection and push down. Now you just are in a risk-free trade from either your short here into this 10 to 13 from up here at this 22, or from here at this 600 to 602, and now we're just looking for continuation. Until we push below this 90, this is where we expect buyers to defend. If we get this push below here, and then the offer like holds, we look for the fulfill. Until then, this is just your current range between these two blue boxes. Yeah. What did Mario post? Oh, new indicator? Are you guys playing around with the that indicator? The alphabet community? What does that even mean? What? Jesus. I'm gonna grab some water. I'll be right back. Yeah, that's basically what I have, sauce. You have to see what happens at 580, but yeah. 68 to 56, next area of interest on a push below. If you're not already at a short, it's hard to want a short here, even though we can get continuation, just because we know that this is buy-side imbalance, right? You want to see this 95.50 now like really hold on offer for a push down into 87s, and then 87s to 90s become our offer, and then that gives you push down to your 80s. I mean, just like the pathing that we have, right? Like it's playing. But we have to treat this as our low here at 90 until we push below, and then show it as like our strong sell. I don't know if you guys actually have stream open, but we've had this mapped out like this for quite some time. And we're now back at the mid of our FEG at this 90. You got to treat this as our buyer until shown as like our offer, right? Like it is what it is. So what you're looking for here is either an aggressive sell below this 90 to 87 on NQ, and then for that to hold as resistance, or a push back up to our 95.50, and then for that to rebid as supportive, right? Just as we saw here. And if that can happen, right, if we don't see this as a strong resistance here at this 95.50, this can just rotate back up again. That is why I care about it. Because we can easily see this exact same price action again, which is the push back down into this area, the bid off of it, push back, push, retest, right? Like that can be the same thing again. If we don't see the rejection here. So you really want to see that offer hold here. NQ. And then that pop down. Well, luckily for you, Sauce, this is now saved forever on YouTube as a stream. What's RTY at? Yeah, we're just testing supply here. This is a very similar area to where Tyest, if the Russell is like validated anything on Monday. We need to see a pushback above this area for the Russell to have like any meaning. I think we need to see this push and then hold and then pop. Or this is just going to be like selling continuation. Hello? Why did it, when I duplicated this, did it go to a single pane? Alright, there we go. Sorry I've been like only charting NQ, by the way. It's just like ES is still just doing what we thought it would do an hour ago, which is if it didn't hold this 703.50, we would get this retest, look for seller acceptance here below, push down, bid at the 701.50, and then look for a pushback down to this 99.75 to 98, right? It's just back down to the bottom of this range. So now you're looking to see if buyers are willing to maintain this low. And there's really not much here until we see that push below 98, and then we can look for this push down into 94 on ES. That's why I haven't really been talking about it, is because this trade has been planned out for the entirety of today, right? Like, it's already been pathed. And with NQ having a bit more range, I can talk about that as we kind of just chop. Yeah, yes, it's god awful to trade. Which is why I have not been doing it. This is where you look for that retest of this 95.50 now, if we're going to pop back up. Same as before, where we saw on a push above this, you get your big ol' retest of this sell. You need to see that strong rejection here at that 95.50 if you want continuation down, or you need to just accept that this is where our buy is. Later, Izzy. Good trade, good trade. Yeah, I definitely feel you. There probably won't be much during this lunch period, and then you have FOMC with the interest rate decision later today, so it can only get worse. Liquidity will dry up before that. Yeah, not great. I was talking to Sauce about this earlier, but it's just like you have to trust your pivot zones and like be willing to participate in an area rather than at a specific level itself, and just be like willing to, you know, have a 5-point range that you're like. This red block is where I'm willing to hold my short, right? Like we're looking for sellers to defend this, and like as long as we're holding below that, like the trade's still like valid, you know, quote unquote. So it's just on slow days, that's kind of how you have to play it. Sadly, looking for that 95.50 now for buyers to aggressively defend if they want to hold this for pushback up. Know where that comes from? What does that mean? For the, I want the lurkers to answer this, but have I been clear today? Have you been able to get something out of it? Has it been helpful? I don't want the same like 5 people who always answer to answer here. You're kind of a lurker, Rory, but not really. Yeah, okay. Great job, Jen. Alright, I'm glad to see some people that we don't usually see in chat type. Okay. And again, there's nothing wrong with you guys being lurkers. I just, the people who are normally chatty in here were lurkers at some point as well, and then started asking questions and being a bit more active, and then they, like, you know, got their questions answered, and then they learned. So it's definitely like not a bad thing to engage. But if you want to just like chill, just keep me informed, like if I'm being helpful or not. That's all I ask. You can continue to lurk. But if it feels like I'm talking nonsense or if it's not helpful, like please, 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 please let me know. Is it 1? I think it might be 2. Let me check. The rate statement's at 2. The projections are at 2. The conference is at 2:30. But the statement and decision come out at 2. Eastern, sorry. Yeah, and that's fine, Tommy. That's totally.
So just keep in mind
Makes
for anyone
sense.
interested, again at 2 p.m. Eastern time today, we do get the FOMC US interest rate decision. So if you'd like to trade this with us in just under 5 minutes time now, our very own Tony is going to be doing a live video where he's going over some prep and fundamental analysis surrounding this event. So again, the live video is on the feed if you want to tune in. This is completely free, just a YouTube link. Again, it's on the feed.
Yeah, as long as I get feedback from those that don't talk much, that's all I care about. Every once in a while, you know. There's nothing worse than like someone never talking in chat and then like just dipping, and I have like no understanding of why, like what went wrong or how I could have helped. It's actually the worst feeling. Right. The amount of lurkers TFC used to have that I just like didn't recognize whatsoever was insane, man. That like just wouldn't participate, like wouldn't interact whatsoever with Discord, or that we had like people who bought subscriptions but then never connected their Discord. It's like, okay, well, what did you think you were getting out of the service? It baffles me. Maybe we'll be able to get a nice value trade, like before FOMC, like figuring out where our historical values are for the pullback, identifying that, and then get it on the record. I don't know if we've been able to do that yet. Usually don't stream on FOMC days, like on Twitch or anything, so I don't know if we have anything recorded of me talking about this before. But basically, like as we approach the interest rate decision in the FOMC meeting and all of that, we'll see liquidity kind of pull away from the market, and we are going to see all of these participants who have been trading this really tight range today kind of dip out, and we'll see either like a strong pull to a previous area of liquidity. So we need to be able to identify that, and then we'll look for that as our support, and then we'll look for a pop back up. So if we can identify like the larger areas of value outside of this range, then that'll give us an idea of where we should be looking for price to kind of settle after the reaction from that decision, and then that'll give us an opportunity to trade once that news comes in. I'll go more into it as we approach that, but hopefully we get some sort of move and it doesn't just stagnate. Mario, did they mess anything up on the patch? Or does it have everything? Oh, yikes. How often do you guys look at internals, SIG, 6 pane for an edge with the ESNQ before taking position? How often do you as well, SIG? It just depends, Bruce. Like, if I don't have a good read on the market, I focus a lot more on internals. But if, like, I've got a very clear understanding of where, like, our buyers and seller value areas are, and, like, I've been able to successfully trade it on the day and, like, catch most of the rotations, I don't look at it all that often. I'll reference, like, the Russell and ES, but like, if I've got a good read and it's playing, I'm gonna continue to kind of like play off of that momentum until it stops working. I think if you have like a hard time understanding of where we are or like what the current like market dynamic is, then you can really focus on the internals or like the underlyings to kind of get a better picture, like a clearer picture of where we are and where we should be watching. I think that's, it becomes a really good reference. But like, if you're doing fine without it, I would just like, you know, glance on it, see, get like a relative sense of where we are, and then just kind of continue to trade as long as it's working. You know, there's no reason to overcomplicate it, right? Like, you have a good read, you've got a good read. Hopefully that makes sense. I'm a big like proponent in like, if you've got momentum and you're trading well and you've got like a like solid, like you're taking systematic trades and have a good read, like just keep going, right? Like keep the momentum going until it stops. And some people are completely against that idea, but like to me, like those kind of days are the days where I want to take advantage as much as I can. But it definitely is super helpful on days where I just am like no clue. Like we'll see, you'll see me start to like really focus in on market internals or underlyings when we have a shift in how the market has been moving. Right? Like as of late though, we've had like a very common we've had a very similar price action intraday. And we've had like these ranging markets, and like it's been playing out pretty like basically the same every day. But like if we got a shift and we were no longer doing this and we were getting extreme momentum like we used to, I would have to reevaluate, right? And like the market internals would give me a really good idea, a good understanding if like something has shifted in the current auction. And then that would be like my gauge, right? But like until that happens, there's no reason to shift because we're not doing anything wrong. Like everything's kind of just playing out. Yeah. Like, tech is definitely still a really great, like, the tech underlings are still awesome to look at to understand, like, where our local pivots are for these rotations. But ever since, like, the, financial, like, the bank collapse news with all of, like, the smaller regional banks kind of going under, like, financials and energy have had a lot more of an effect on, like, where we are marking our lows on a day. Like, XLF, XLE have been doing a lot for that. That's when I started to really focus on the Russell, is when, like, the banks really started to kind of influence directionality. Whereas before we were, like, hyper focused on NQ and, like, Microsoft and Apple to kind of, like, give us our pivots. And, like, yeah, weighting wise, like, those are still very important, but, like, they just haven't had the same sort of pressure for market direction for our, the way that we've been trading.
US stock indexes pair gains last flat.
Yeah, right. So, like, and that's just one of those things where you'll kind of, like, notice that reaction, that pattern, and then I look at certain indices, or, like, I'll put more weighting on certain underlyings depending on what kind of market environment we're in. And, like, right now we're in very ranging, balanced markets with a you know, an overall upside pressure. So, like, all I'm doing is waiting for the names that are lagging to kind of find a pivot low, and then we just trade the reaction, like, back up, because and, like, that's the market that we're currently in. Like, that's the environment. So, but, like, if we were going back to, like, the bull run, right, then all we're doing is waiting for Microsoft, Apple to basically find lows and then treat it the same way we've been treating the Russell. Like, if Microsoft, Apple finds a bottom, then we buy, because they're the only thing that influenced the market back then. In that sense, like, it gave you your direction decision. I don't know. Hopefully that makes sense. If you have questions about anything I just said, let me know. Anyone, not even just Bruce. Because that might not make sense to people who are new to, like, my train of thought. Alright, I'm glad that made sense to you, Bruce. Yeah. Good question. We're coming into our PT here on NQ. This 580, important level. Got our rejection of that 90 to 87 area that we were looking for the push down for the full fill.
We have posted out a US interest rate prep document on the feed for all those interested.
Here it is. See if we find buy side value here, if any sort of liquidity pops in. You'll be looking to see if buyers are able to hold here, and what you want to see buyers get back above this and then trade up. Or this is going to, where you look for seller acceptance below, right? So below this 580 on a reoffer. I'm going to delete this. We're basically watching for either one of these moves, but we understand that buyers will try here. We just need to see either a push back up above this and then hold, or a push below this and then this being our reoffer for a push down to 68s. But until then, this is your low. Hopefully we get continuation, but just understand, like, this is the bottom of the FEG. Yeah, VWAP, we switched over to YouTube because I kept crashing, and there's 0 latency. But if you have my chart book, you don't need the stream. You can just watch me draw on my charts live from your own screen. So here's the 3 pane, and then that's Sauce just linked to YouTube. So whatever your preference is. I'm gonna just go back over to our 3-pane just so you have an idea of why I was looking at the Russell at that area. Like, we're just following the path, like, almost to the T here. We're at our next little potential pivot on RTY where we can potentially find a low. Really no sign yet on Delta, but this is where we expect a bit of relief to either retest back up to this edge at 95.6. Right, like here, basically. We expect a bit of relief here. Or a failure, right, and then a push down into this 92 pivot. But this is where we are looking. We're back to our 98, where we bought this morning on ES, and we are at our 580 target on NQ. So this is a really great area to risk off, and then watch for reactions for any sort of continuation on the day. I love it when things play out as I talk about them live. It's great. So this is your pivot now, right? We need to see if sellers are willing to hold the mid of this FEG. If they are, and this is now our resistance, we look for that push below and then the continuation down. We have no understanding yet if this is going to hold or not, but that is the general idea here. Is this maneuver. And we can see if we go back to the Russell, we get that little bounce, rejection, continuation, push down. I love the new YouTube streams too. If I miss something, I can just rewind 30 seconds and hear it again. Yeah, huge. I think you guys can clip as well. So if there's something that you like found to be, you know, quote unquote profound, you know, you can save that for yourself. If you really felt one of my rants. Just a montage of me saying you're not gonna make it. I'm gonna delete this now that it's played. Just so that I can cut out some of this noise.
Shortly expecting the results of the Fed reverse repo operation. Pound dollar falls 0.5% to 1.25, the lowest since November 23rd.
Man, I've been so tired today. Like, I'm just running in this position. I can't be bothered to try to trade a lot. My brain is at like 30% efficiency. Just hanging out with you guys, walking through the path. I don't know why I've been having so much trouble sleeping.
95 counterparties take $823.329 billion at the Fed reverse repo operation.
My schedule's been like completely screwed ever since I got strep last, was that 2 weeks ago? It was fine, and then I slept for like 3 days straight, and then I'm ruined. Absolutely ruined. Here's your PT for the Russell. Watch our reaction into 92.1 here. If this becomes resistance, we just look for ADR as our low. Right? We look for that push below, then pop down into this. Until then, we look to see if buy-side liquidity will step in here to defend this. I'd like a negative 1,000 tick off of this push down, and then basically like a pop off of it. That's kind of my idea at this point as we approach ADR on the Russell. You see like ES make an extreme, an actual extreme, not this garbage into negative 500. We get like a little liquidity pop into this FEG here at 95s. And that gives you your structure repair on NQ, right? Pop into this. And you get that negative 1,000 tick into Russell ADR. I close my short. We look for a long. I then take that as a trade, and then I don't take anything until JPOW gets on at 230. You pump the market as he does. And then I hop on New World and play the expansion. That's the plan. I'm so sad, man. I mean, I guess like it was good for you guys because I traded with you for like half the day, but yesterday was supposed to be me grinding the new season, and now Mario gets to do it while I'm stuck here with you guys. What a terrible trade-off, you know? It's supposed to be my day. Be just a game. Mario paid the devs to push the season expansion one day. Crazy. I wish I could play the finals with you guys. It won't open on my PC. I haven't played a shooter in so long. It'd be fun. Yeah, I think if 80s hold, CJ, that's fine. On a rebid here. to watch to see if Russell shows actually a low, or if this is just going to hold the opening range low on ES and then push down. I'd really like to just get this short to $1,000 per contract and then close and then do nothing. Surely they give us the negative 1,000 tick here. We don't just have to rotate this low for the next 10 minutes. Yeah, I think that there's is basically of no consequence until we push over or down to here. Like on either one of these pivots. I think this is just rotating ticks right now on NQ. I think you need to see a push and hold above 84s. Or a push and down into like 72, 74. Or this is kind of just rotating this base. May move this over for the smaller pane. Because you have to remember, like, all we're doing right now is testing opening range low from below. Like, there's nothing really here in that sense. And like on NQ, like all we're doing is trying to see if we can break and push back over, but like there's nothing of substance until we can push back over this blue and then hold it as supportive, because all this is your seller retest. So like again, it's just kind of like rotating ticks, but that you can make money with that, right? Especially if you're bidding off of that 80, because the same principles apply. It's just like I'm gonna go to 1 second chart so that you can visualize this. Do we see why that 80 level that CJ is playing off of makes sense? Either it's resistance and we're pushing below, or it becomes supportive on a look above, and we can clearly see that as our inflection point, right? So it's a really nice level to play off of if we start to see that bid hold that price. And then we can just play that back up. And so like you get this little micro range, but it doesn't matter. Like you can rotate and make money in this area. Just watching the DOM here and then watching to see if we're trading above or below, and then what happens on a push above it. Are we then able to maintain buyers here to defend that level for a push up? If so, then great. Trade that back up. If not, right, then you look for that acceptance and the offer to stack here and then push price down. This is why I don't mind the smaller time frames, because if it helps you visualize what's happening on the DOM, then go for it. Do I recommend you trading on that small of a time frame if you don't have an understanding of what you're looking for? No, hell no. But like we can just rotate ticks around this, and then you just play off of that as your auction pivot. That 80, you're good to go. Oops. Yeah, great job, CJ. Yep. Yeah, and like as long as we have an understanding of what like the overall play is, right? Where we're respecting this blue, and we're respecting that ES is just retesting opening range low, we just risk off into that level until it becomes supportive, understanding that all we're doing is just rotating ticks until we find acceptance above or below. Right? Like that is what it is. And now we're getting into Russell ADR. So we finally got into an area that I care about. My long criteria is still either like tick extreme in a -1000 or a push down into that yellow box on ES, or for Russell to show a bottoming at ADR with the delta confluence, where we like show a bottoming out on Russell delta and then a higher low. That'll confirm it just as well for me. What time is it? So it's 1:29. So 30 minutes until decision. So expect absolute trash. Yeah, so the cheat code here, Gav, is to trade both Z and H. Long 5 contracts on Z, short 5 contracts on H. It can't go wrong. Yeah. Surely nothing could go wrong. You're going to jail, bud. It's unfortunate, man. They just don't want you to succeed. Horatio, bud. Come on, please. This is we're done. Come on, man. That's so out of pocket. Jesus Christ. Mods? Oh boy. Chad is something else right now. That's how you know the market's slow. Oh my god, Trade of Eight just crashed. What a terrible time for that to happen. What does that even mean, Flex? What does that mean? Oh god. Yep. What? Is this that Apple position that you guys were talking about? 200 calls. Is this one? Is this what you have left? Were you down? Weren't you like down bad on this position, Grotto? I'm glad you made up for it. Glad it's doing better. I don't know, 50? 175? What's wrong with you? What made you choose Apple 175 Apple 200 calls with a expiration of 1/19/24? Throw me, walk me through the thought process. True, yeah, yeah. I mean, you proved that right. Gab, that emote is so rude. Jesus Christ. Yeah, I mean that's a big position, man. Like even at 10 contracts, like your market value, 3K, like that's a huge options position. $175 contracts on a swing like that. Like, were you like 80% of the liquidity on that contract at the time? Like, was there volume being traded? At all? That's something. I mean, it's fine to trade options with the long-term port. It's not fine to continue to average down on a losing position with that much size, with your DD being, I hope it goes back up. I think options are a great long-term strategy when used correctly. Now, Russell is trying to bottom out, but just be careful, guys. Like, I don't know how much you're gonna get, even if it does bottom out here. Remember, you have liquidity is going to start to kind of dip from the market as we approach. We have 20 minutes until FOMC. So even if this does pop, is that a trade that you want to be in? Is the question. Just have, like, get your expectations in order, right? Are you going to stay in this trade from into FOMC? And does that meet your risk criteria? Are you willing to just scalp as long as this maintains a higher low on the Russell? And are you going to close into that into the decision? Just like walk yourself through it. Like what's the plan? I am out of everything as we approach FOMC. We've gotten the full move that we wanted. So now that we're here, like, I'm just going to wait. We will have more opportunities. Promise. SPY is going to tank? Maybe. Or maybe it'll moon, you know? I think SPY is a great example of us being in the middle of nowhere right now. We have sell side liquidity above. We have buy side liquidity below. And we will wait for reactions as the market pulls back into these levels. So let's talk through this. What do we need to see for continuation down and for this 80 to not be the low? Well, we want to see a push, the ability to then hold 90s, and then a recovery of 95.50. 95.50 kind of being your key here. Or this will just come up and then have the ability to come right back down. For sell side continuation, you want to see this basically reject here, push down below 80s, 80s then be our strong seller, and then we look for downside continuation. There's not much to trade here unless you're willing to buy this edge low at 80s, sell into this 90 and this 95. There's just not much here. This is, we shorted here, right? So like, what are you looking for now? And then we also looked for shorts here and here. So at this point, you're either looking for a long off this low, or you're waiting for this to become our long entry and risk off for our shorts to become resistance on a push below into 80s for a continuation down. Until then, like, you're just kind of risked off. There's just not much. For ES, what we're watching now is our original buy today.
At 2 p.m. Eastern Time, we get the US interest rate decision. Forecast no change on the prior 5.5%. The FOMC summary of economic projections, and the FOMC rate statement. Looking at some analyst views ahead of this, Wells Fargo say it appears that the Federal Reserve's tightening cycle has come to an end.
This guy's about
Since
to talk
the
for
summer,
30 minutes.
the FOMC has been keeping its options open regarding the possibility of an additional rate hike. However, recent economic data and comments suggest less need and desire to exercise that option. We see the committee leaving the Fed funds target range at its current level of 5.25 to 5.5% at the conclusion of its upcoming meeting on December 13th. If realized, the third consecutive hold would suggest that rather than the FOMC merely hiking at a slower pace, the Fed funds rate probably has reached its terminal level of this cycle. With the committee seeming to settle into a prolonged hold, the conversation around the future policy path will shift toward when and under what circumstances the FOMC eventually cuts rates. We have maintained since the FOMC last raised raised the Fed funds rate at its July 26th meeting, that the increase was likely the last of its hiking cycle, a view not always shared by market participants. As recently as October, market pricing suggested that another 25 basis points hike was slightly more likely than not, a bet bolstered in part by committee members' own projections in September, as shown in the near.
The near what?
The declining odds of one additional hike this year comes as both sides of the Fed's mandate are moving toward their longer-run desired levels. Notably, inflation has made encouraging progress towards returning to the FOMC's 2% target. In October, core PCE inflation, the Fed's preferred benchmark for price growth, fell to 3.5% year over year, nearly
Here's your test on a
two-and-a-half-year low.
yes.
The latest monthly readings suggest the recent pace has downshifted even further, with core prices in October up at a 3-month annualized rate of only 2.4% relative to July.
Here's your test on NQ as well, into our 95.50. You need to see a push above and then a hold for this to not just be the high. Okay. I was yapping for quite some time. But we're just looking to see if buyers can reclaim here on a push, or if this will just be where our previous buy was when I got on in the morning at this 98. Right? Is this now a seller? Right? Is this a bear flag down? And what we're looking for is an acceptance from this this 99.75, 98. Right? We want to see sellers basically build below our previous buy, and then show a look below that 98, strong offer, and then push down. Or this will just base again, and then we'll trade back up into the current range. So again, we have news coming out very soon. It's going to get very volatile. The market's going to become very liquid. Just understand your risk. I am flat from our short. I will wait. You do you.
At 2 p.m. Eastern Time, we get the US interest rate decision, forecast no change on the prior 5.5%, the FOMC summary of economic projections, and the FOMC rate statement. Looking at more analyst views, ING say the Federal Reserve is widely expected to leave the Fed funds target range at 5.25 to 5.5% at the upcoming FOMC meeting. Softer activity numbers, cooling labor data, and benign month-on-month inflation prints signal that monetary policy is probably restrictive enough to bring inflation sustainably down to 2% in the coming months. A narrative that is being more vocally supported by key Federal Reserve officials. Today, markets are clearly of the view that interest rates have peaked, with 125 basis points of rate cuts priced through next year. Underscoring this shift in sentiment, we have seen the US 10-year Treasury yield fall from just shy of 5% in late October to a low of 4.1% on December 6th. In that regard, the steep fall in Treasury yields in recent weeks is an easing of financial conditions.
Wait, question. So what even is bullish at this point? I mean, the market's bullish, man. It just
For
doesn't
example,
feel
mortgage
great
rates
today.
have been swift to respond, with the 30-year fixed-rate mortgage dropping from a high of 7.9% in late October to 7.17% as of last week. We think the Fed will eventually shift to a more dovish stance, but this may not come until late in the first quarter of 2024. The US economy continues to perform well for now, and the jobs market remains tight, but there is growing evidence that the Federal Reserve's interest rate increases and the associated tightening of credit conditions are starting to have the desired effect. And from BlackRock, they say we see the central banks pushing back against market hopes for rate cuts at this week's meeting. We expect structurally higher interest rates in the new regime.
The new regime. The long at Russell ADR strikes again. Again, I don't really think this is a great trade, per se, with what's coming, but, like, it's a really great risk off for shorts. It just makes sense. Our 80, now we're back to that 95 on NQ. I think this is basically just chop until we get decision, but it's a nice little slow grind back up from Russell ADR. What you like to see. I personally will not be taking a trade until decision comes out and we get our initial move, and then we can play a direction off of that. There is no reason to put risk on for me, personally. We've been in a trade for like 80% of the time I've been on today, so it's fine to not be in every rotation, as long as we risked off into the low, right? I don't need to be long from the low. Yeah, that is the way to do it. I think a good rule of thumb is something that you can start to watch for. I'll draw it out for you. So on FOMC days, you're going to get a... Whoa, what is this lag? Hello? What the heck was that? Okay.
At 2 p.m. Eastern Time, we get the US interest rate decision, forecast no change on the prior 5.5%, the FOMC summary of economic projections, and the FOMC rate statement.
That was really weird. So usually get a strong, so we have like a balance per se. Let's say like this is pre-FOMC, get extremes, whatever, right? You get some action that looks like this before real liquidity is drained. Off of the FOMC candle, you usually get a large candle up, which has caused a squeeze out of this range. What you want to be watching for is what happens at the halfway point on this. Is it defended? Do we need to fully retrace this candle on weakness into like usually there'll be like a node above or something, like a very clear level in which we sell off, right? Then we are going to be watching for, from this initial reaction, are we able to hold the halfway? Because we want to see if buyers are willing to defend this poor structure that we just created. If they are, we can now use this as our pivot to look for a retrace back up to the highs. If we push below this level, we will look for this to fully retrace the low of this squeeze candle up that we got. We've now determined where value is being found off of that pullback, right? We now want to mark the low and the high wick of that volatility, because this is now where our magnets are for price. So we'll mark those and the mid. And now we have 3 pivots to trade off of, where we're watching to see, does price oscillate in the lower region below for downside continuation off of that move? Or are we able to digest it and then push up? And we will risk off into these levels. But this mid reaction after the initial decision, the initial move, is going to be key to know if we get the full retrace or not. And usually we can get a really nice sell re-entry up at this high retest and a buy re-entry off of this, because we will get a structure repair either way. But watch the mid and watch the edges on retests until we show acceptance below or above. That's usually how we play FOMC in these kind of days. Especially if we've already found the low and high nodes and we know where like selling is going to start to take place or buying is going to take place. And then we just watch how we retrace around those areas. But having like marking the mid pivot of like where we'd be expecting buyers to kind of maintain the higher lows is a really great area to know, like, oh, are we seeing acceptance above or below that volatility candle? Do we need to completely fix that structure off of the squeeze out of this range? And as long as we're like visualizing it like that, then we can kind of create a risk profile for where we can be taking trades. We'll see if something like this plays out. I feel like the FOMC moves lately have been pretty like like they just haven't really mattered all that much until JPOW talks. Like we get an initial like squeeze reaction from just zero liquidity being on the book.
1 minute remaining.
And then we get like a structure repair, but then when JPOW talks, we get a move up afterwards. Or like a drastic move down. But this will be interesting to see. I feel like it's been like pretty tame lately. The risk profile? Well, it's just, you need to understand, like...
10 seconds.
Like, where seller value is. Like, we know that we've identified this is where our seller is located, and we're just rotating until this liquidity comes back. Like, we shouldn't expect anything more
No
or
change,
less.
no change.
Just wait
Rate
for
remains
this.
unchanged
We'll see.
at 5.5% as expected.
We know that we have sell-side liquidity here.
So FOMC median forecast shows rates at 3.6% in 2025 and 2.9% in 2026. Median 2024 unemployment projection unchanged at 4.1%.
Wait for the initial reaction to be over with.
FOMC median 2024 growth projection at 1.4% versus the prior 1.5%. FOMC rate forecasts show a wide range of projections for 2024. Economic growth has slowed from strong pace in
Like,
the
look at the
third quarter.
liquidity on the DOM. Like, NQ went from one, like, there's like one, there's nothing.
So the Fed will continue bond holding reductions as previously planned, and the Fed will continue the same pace of reducing treasuries. Tighter financial
The
credit
reason why we
conditions
get
are
these
to weigh on the
moves is because
economy.
there's no one willing
The
to be on the other
FOMC
side of this
vote was
trade.
unanimous.
So the spread is just, like, we just shoot through
The
it.
Fed repeats US banking system is sound and resilient, and inflation eased over the past year but remains elevated. Median forecast shows 75 basis points of rate cuts in 2024 to 4.6%.
Full retrace
Fed
of the
will
range.
assess the extent of any additional firming needed, the FOMC median 2024 core PCE forecast declined to 2.4%. Fed officials' median view of Fed funds rate at the end of 2026, 2.9%. Fed officials' median view of Fed funds rate at the end of 2025, 3.6%. The median view of Fed funds rate at the end of 2024, 4.6%.
This is ADR that we just
and the
pushed
median
into
view of Fed
at
funds
18s.
rate at the end of
Sorry, at 19.
2025, 3.6%.
Just back to the top of our range. There's no trade up here until we see a push
Median
above
view
and
of Fed
hold.
funds rate in the longer run, 2.5%.
If you're getting FOMO or if you feel like you missed out on this move, you need to reevaluate.
Fed projections show 8 of 19 officials see policy rate above 2024 median, 5 see it below that. And Fed policymakers see weaker GDP growth and the same unemployment rate in 2024 compared with September projections. Fed officials see inflation at 2.4% in 2024, returning to the 2% target in 2026.
There's probably a short up here, to be honest. I will wait though, but this is a area where if we don't see a strong continuation here, this is just our high. This is ADR.
And inflation has eased but
Q
remains
top of range.
elevated, and FOMC strongly committed to returning inflation to the 2% target.
I will be watching for the pullback.
And job gains have moderated but remain strong, and unemployment rate remains low. Tighter financial and credit conditions are likely to weigh on economic activity and hiring and inflation, but the extent of effects remain uncertain. The S&P 500 gains ground after the FOMC statement, last up at 0.3%. US Treasury 2-year yields fall further after the Fed statement, last down 17.5 basis points at 4.558%.
Yeah, I mean, this is Russell ADR and ADR. Like, just expect some chop up here.
Fed swaps
Or
price
reversion.
130 basis points of cuts for 2024 versus 115 basis points pre-Fed decision.
Once this like slows down, we can talk about this and like your risk profiles and whatnot. But like, if you seriously, if you feel like this is the trade that you want to be taking, and none of the trades that we've taken today, and this is like where you feel like this is, you're like, yeah, this is my opportunity, I've missed it. Like, you need to reevaluate. Like, where this is...
Euro rises to
this is gambling.
1.084, the highest since December 5th. Yen gains 144.2, strongest since December 8th.
Like, imagine being short down here, where we risked off, and then this fully retraced, and now you're in this squeeze, and you're the one that being punished. Like, why? What are you doing? Just don't understand. Like, there's a reason why this looks like this. It's because people were short from here.
S&P 500 continuing its advance after the FOMC decision, up 0.56%.
You see the upside, and you're like, wow, I missed out on the move. But it's like, this could have blown up your account in a single candle. Like, is that worth?
US interest rate futures raise odds of a May rate cut to 90% after the Fed decision versus 80% just before.
In my opinion, no. Like, how many solid trades have we taken today with rules, with invalidations, with targets, And then like the trade that you're looking for is just this pop. Like that just compound, dude. Your first signs of weakness here. This is good. This will be a good pullback. Let's see if we can hold at this 57 to 50 area on NQ on this retest. This is ADR retest on ES. You don't really want to see this push below this 1875 to 21 area on ES. This is Russell retesting ADR as well. So this is your first signs of a pullback for this structure. This is really ugly, but it's fine. We can now watch these ADR levels that we have for buyers to try to defend and flag from here. Look at that re-offer at the 90s. Globex low, pop, push. You love to see it.
US rate futures price in more than 100 basis points of rate cuts in 2024 following the Fed decision. Little changed from before.
You finally got a tick extreme on the day from this move. That's exciting. God, I hate when everything just gets so skewed from this stupid price action. My charts! Really nice hold of Russell ADR here so far. Solid bid.
US rate futures lift March 2024 rate cut chances to more than 60% following the Fed's statement, according to FedWatch data.
I will be looking for like a reversion soon.
According to the EU Budget Commissioner, Germany's 2024 budget deal is a good sign. Changes dynamics in talks on EU budget revision.
If we push below ADRs, you can look for structure repair, I think. Until then, just be very careful.
We have posted the FOMC press conference live video on the feed for all those interested. US stocks extend gains, S&P 500 last up 0.6%.
Probably. Good. Nope. Go back to our drawing that we did, right? This is... sure I'm not muted anymore. Yep. So this is the range before FOMC, your candle afterwards, and now we watch to see our reaction. Do we need to fix the structure or not? So if we look at this on the 15-minute on, say, SPY, you can see you have your range that's been built, you have your candle, we have a huge amount of supply above us on SPY, and now we need to wait to see if we need to retrace this or not. So we can start to watch as we approach our seller value above that we have. Now we can take a measured move and see, now that this new 15-minute is closed, sorry, it's just opened, we can watch to see if pullbacks need to happen or not. You can see the same thing on like a 15 on ES. I think that's probably, or on, yep, NASDAQ. So drawings. You see you got your range, your push, and now we watch to see if we need to fix the structure or not. I don't know. I don't care. I will wait to see what happens at these ADRs, like I said. So far, holding the Russell ADR and ES ADR pushing into NQ ADR. All right, can you talk about the risk profile you use?
US Treasury 10-year yields fall to the lowest since August, last down 12.5 basis points at 4.08%.
Yeah, I don't really know what you want me to say. Like, we want to be looking at edges. We risked off our short at our edge low here, which ended up being the bottom. We then pumped up, right? You want to be looking to participate at edges. So where we are now, there's nothing of real merit to take a trade. I'd like a pullback to the 650, 657 area to look for longs, for a push up, or a push over this like 711 on NQ, or this is just going to rotate around here, or do a full rotation back down to this node. So like there's not much for me here, and that's fine. I'm just going to watch areas where we've seen buyers care previously, and then trade around that. I really do. I'm a strong believer that if you think that you're missing out, or this is the trade that's
US
going
Treasury
to make
2-year drop to the lowest since mid-June, last down 19.6 basis points at 4.537%, and the yen gains more than 1% to 143.92 per dollar as US yields fall.
if this is the trade that's gonna like make you, like it's more than not. Like, the chances are it's going to break you more so than make you. Like if you're dependent or like waiting on this kind of trade to save your account, like your entire mental is screwed. Like there is no, like unless you're willing to trade off that edge low and just risk it, like there's just nothing. There's like what are you doing? What are you trading? What's your risk profile? What are you looking for? Are you willing to have
The S&P 500
50
still
points of
extending
drawdown?
gains after the FOMC signals the end of rate hikes and lower rates in 2024. The index is last up 0.65%.
We've taken so many solid trades today, and you could just ruin it all by trying to gamble off of that candle. In a single trade, you can blow up your account. Like, how is that worth? How is that worth? Pushing into NQADR here, this is an area I care about. See what our reaction here is into this 98.99 area on NQ as we attempt that 730 on ES. This is your first this is basically your next pivot for ES. Our reaction here, you need to see like a push and hold
At
over
2:30 p.m.
and then we can
Eastern
look for
Time, we get the
745.
FOMC
Until
press
then,
conference. We have posted the live video on the
you
feed
kind of
for
want to
all
consider
those
this
interested.
your top, I think, into NQADR and into our 730. Again, above this, we can look for like 730 to hold, and then we look into the 735 to 738, with your final target being the 745. But we are at a point where, personally, I need to see us come down first and show a bit of a repair for me to be interested in taking a trade. I don't have a level that I can play off of that gives me any sort of confidence to trade around, right? Like there's not much other than like looking for a short. Like what long level am I playing off of that invalidates this move? And like what short level am I playing off of to validate the move? Like I just don't have enough information to trade. Other than just like YOLOing, pressing the buy button, and then just like hoping for the best, right? Which it'll work until it doesn't, and then you get your seller the steps back in, and then liquidity comes back in the market, and all of a sudden you get a reality check. So we are at NQ here into 711, 712-ish. You want to see these higher lows being maintained for trend continuation, or we will get a rejection here. Ideally, you see this 99 hold, right? And then we build and then push back over this 711.75. But if this does not, right, we look for a push back down. We know we have a buyer here at this 85 level. That's your first pullback if we break below this 99. Until then, there's momentum, right? There's not much to talk about. We wait for the market to create a bit more structure so that we can play off of and understand our risk. Yeah, I mean, I guess you can look at it that way. I mean, we knew that was the bottom. It was ADR. Like, it is what it is. But it also could have been a $100,000 loss. There's just no point. Who cares? Like, if you only look at your risk to the upside and don't look at your risk to the downside, you're not seeing the full picture. Sorry, if you only look at your reward to the upside and don't look at the risk to the downside, potentially. Like, that's not trading.
Dollar extends drop against the Japanese yen to 143.76, now down 1.17% on the day. At 2:30 p.m. Eastern Time, we get the FOMC press conference. We have posted the live video on the feed, as well as attached it to its entry on the calendar.
You'd like to see this 30 to like 28 area on ES hold if it was going to. Solid rejection at this 35 on on ES. That was our next target. Again, you're just watching to see how these pullbacks, how buyers react on these pullbacks into previous areas. There is like literally zero structure to play off of, so all you're doing is playing off of where we saw like a little bit of stagnation and a node build. But like this again is where you want to see price be able to hold and maintain, or we get a further continuation down. This is our first like bit of aggressive selling on Delta to and divergence on Tick, telling us that like the seller is definitely real and trying, but that our overall trend is still up and that you should be very careful. Again, like I don't have enough information to trade confidently in either direction until I see like liquidity step back in, and yeah, like I just won't be trading. Powell speaks in 3 minutes, which will cause another spike in volatility. You had just initial decision come out, and then you have the conference with J Powell at 2:30. So you'll get another directional move here in a second. Or I should really say three minutes. You'll get another directional move. That will either like fully retrace what we just did or continue to push us. Or both. Yeah, rate stayed at 5.5. He talks in 3 minutes. I don't know.
Fed swaps price policy rate under 4% by December 2024. And shortly expecting the beginning of the FOMC press conference.
If you guys give back your gains from today after we like navigated these ranges and these lows to the T, I'm gonna be very upset with you.
Fed's Powell has begun the press conference and says we are squarely focused on the dual mandate. Fed's Powell says inflation has eased without significant rise in unemployment, but says inflation is still too high and the path forward is uncertain. Powell says we have significantly tightened monetary policy. And Powell says we're well into restrictive territory. And the full effects of tightening are likely not yet felt. We are proceeding carefully. Natural gas Widowmaker March to April trade shows a US supply glut.
I think that was fine, Gav. It's the rejection of ADR. It's fine. It was our 35 target.
And
Back
Fed's
down to our
Powell says
FEG.
we will make future
I'm glad you
decisions
risked
on
off here.
totality of the data and evolving outlook and incoming risks.
I think it was a fine trade. It's just you have to understand your
And
risk.
Powell says growth in economic activity has slowed substantially.
As soon as we start to see lower highs being made, then you have edge to play off of, right?
Powell says activity in the housing sector has flattened out. And higher interest rates are also weighing on business fixed investments.
Surely that funded account that you get funded on FOMC is going to
The
last
labour
in our
market
regular
remains
market,
tight.
if that's how you trade. Surely. What are our levels above on NQ? I mean, you just need to see a hold of ADR here on a retest and acceptance above. Until then, there's not really much.
Nominal wage growth appears to be easing.
I don't really have levels for NQ. I'm just trading off of ES levels. Up here. Because I only have ES marked up for upside.
Labour demands are still exceeding supply though.
NQ, I just create like auction pivots.
And policymakers
and then I just
expect
trade
the
off of
labour
ES
market
RTY for
rebalancing
most
to
of the time
continue.
for where we're actually finding our lows or highs. Like structurally, I usually don't trade off of NQ. I trade off of ES.
That will put downward pressure on prices. Powell says lower inflation readings over the last several months are welcome. Powell says we estimate core PCE prices rose 3.1% in a 12 months ending November. And Powell says we anticipate getting inflation to 2% will take some time.
If price can build at this like 35 to 38 on this test above, I think it's fine structurally on ES. But like we really need to see acceptance above this blue. This is a major area for me. And then we can look for 45s. But like you need to just chill. Like I don't know how to be. Like there'll be more trades. Have some self-control. Would you use a fib extension? No. There is no edge here. There's nothing
Fed
here.
estimates November PCE prices up 2.6% year on year and
Chill.
core up 3.1%.
I'm actually gonna turn
Now
off stream and
restrictive
go away
stance is
if you
putting
guys
downward
don't
pressure on economic
shut up.
activity and inflation. Fed's Powell says we believe our policy rate is at or near its peak. Powell says we are prepared to tighten policy further if it's appropriate.
I do not trade off of zero structure. That is my entire edge.
We will keep policy restrictive until we are confident we are on the path to 2% inflation. Policymakers don't want to take the possibility of further hikes off the table.
Good one, George. Yeah. Yeah, like, I don't mean to be rude, but it feels bad after I like preach risk management and we take like 20 solid trades in a row and we call every move and then everyone freaks out when we see like some volatility to the upside. It's like, if you want to play this, go and buy an option with like understood, like known risk, right? With like, but like if you're trading futures with this, like you are out of your mind. You do not understand what this can do to you. Like, a leveraged position here with a lack of liquidity, you can instantly blow up your account and destroy yourself. Like long-term damage can happen here. You don't understand your risk and like the notional value of what you're trading. And go trade options if you think this is bullish. Like, you just can go in, you bet off of it, right? If you want to gamba, do the gamba. Yeah, no, you're good. I just like we're here every day. There's a trade every day. You've been like successfully making over a K a day with solid risk management, compounding. Why give it back by one bad trade as soon as JPOW says something that the market doesn't like, and then we retrace 300 points on NQ in a matter of seconds, and then all of a sudden all of their gains for the last 3 months
US
are gone
stocks
in a single
extend
trade.
gains, S&P 500 up 1%. And Powell says we added the word any to show we thought we likely at or near the peak for rates.
Like, either you are maintaining your risk in all of your trades,
US 5-year
or you
TIPS
have
yield
no edge.
falls more than 20 basis points on the day to 1.94%.
Like, there's like, what? Okay, you have an 80% win rate, but the one trade that you took a loser on is FOMC, and we dropped down 200 points. Sweet, nice job, man. Huge. You just lost all of your gains and blew up your account.
China's offshore yuan rises 0.5% to 7.157 per US dollar. And the Dow Jones is up 1%.
Like, how bad would that feel? How defeated would you be? For what? For some internet clout in the screenshot that you made money? Like, great
Powell
job, bud.
says we are still focused on the question of
Show me
whether
your
rates
P&L curve
are
over the
high
last
enough.
year, over the last month.
But Powell says it's not likely we will hike further.
Later, Ty.
Powell says policymakers are thinking and talking about when it will be appropriate to cut rates. We are still seeing strong growth that appears to be moderating and inflation making real progress. Powell says no one is declaring victory. That would be premature. Powell says on rate cuts, that begins to come into view and is now a topic of discussion. Fed's Powell says today at the Fed meeting, many people mentioned their rate forecasts.
Yeah, of course, man.
Powell says there was a general expectation that rate cuts will be a topic of conversation going forward. Powell says there is little basis for thinking the economy is in recession right now.
Little basis.
Powell says there's always a probability there is a recession in the next year.
Oh no, Cass, you don't need to be scared to ask questions. I
Brent
don't
crude
want you guys to
futures
blow
settle
up.
at
That's all.
$74.26 a barrel. That's up $1.02 or 1.39%.
The stack targets are fib-based targets off of a range created by ATR.
Powell
I
says,
believe.
I've always felt there was a possibility the economy could avert a recession while inflation came down, and so far
Like an
that's what
ATR
we are
pivot,
seeing.
and then
That
fibs are
said,
based
the
off of
results
that
are
for
not
extensions.
guaranteed.
So they're just fib-based, just rotational targets. Nothing to do with price.
Treasury 2-year yield falls more than 26 basis points on the day.
Would you look at them? Yeah, I think they can be of value. Are they of value right now? Probably not. Is anything of value right now? Probably not. The invite is invalid. If you look in the description of this live, there should be a link to the Discord. Let me double check. I think for
Treasury
a larger
5-year
targets
yield falls
cast,
below
you
4%,
should
the lowest
switch to
since
the
July
15
20th.
minute and look at the targets for that. Or like larger pivot fibs. And if you need like
Powell says
larger
this
targets,
is the year when
remember that we have a
distortions from the
newsletter that Mario
pandemic
puts
become
out
unwound.
with our actual structure that you can reference with like real value and not some just like fibs, but like structurally, historically, levels of importance on the higher time frame. I am personally waiting for JPO to shut up and for us to retest this 38 to 35, and if we bid off of that, I will look for a long. Yeah, no, like, I'm not even, like, there's no... Like, there's nothing here until this guy shuts up.
US Treasury yields continue to fall as Powell speaks. 2-year yield drops to 4.445%, the lowest since June 6th.
I don't know. I think always just reminding yourself consistency is key. Just remind yourself of that, and like remind yourself that there is always going to be a risk and a reward. And if you're only looking at like the upside,
Powell
and not
says the difference in projections
acknowledging
reflects
the
lower
potential
inflation than
downside,
previously expected.
that you need to reevaluate. Like I think it's fine if you had like gotten in at the edge low where we risked off short, right? But like even then, it could have gone against you, and you could have been in a really like awful position. And that's why I think like putting on bets with maybe options where you have a known risk.
Powell says
limited
growth is
risk.
slowing, we believe, as appropriate.
That would have been great, but like trying to trade this with futures is just so risky.
And we are very conscious of real rates is a part of how we think about things.
Like, a lot of you haven't been in an environment where when liquidity dries
Fed
up,
swaps
trying
price
to
in
exit
more than
a trade,
140
what that
basis points
does-
of rate cuts by the end of 2024.
It's just, it is so terrifying
And Powell
being in a
says
trade
it's very
with,
hard
with
to know
low
exactly
liquidity.
how tight policy is at any given time.
Trying to get filled without getting like absolutely ruined.
And Powell says expectation would be that real rates is declining as we move forward.
Maybe, because I don't know. Or they're ruined, right? Like, who knows? Options flow into an event like this. It's just so useless. We don't know what the other side of that trade was. We have no clue if they were hedging, if they were, right? Like, we have no clue.
Powell says policymakers are thinking we have done enough. Powell says, but we are not fully confident in that view yet. Fed's Pal says we are still well above 3% on core PCE though. Fed's Pal says if we have stronger growth, that will be good, but it will mean it takes longer to get inflation back down. Fed's Pal says above trend growth could mean ultimately that we need to hike again.
It is what it is. Just remember that Mario is on New World and not trading right now. And just remember that I'm not trading right now. And if neither of us are trading right now, should you be trading right now?
Fed's Pal says on the labour market, wages are still running a bit above
we
what is
don't
consistent
care,
with
should you
2%
care?
inflation.
Again, if your profitability is dependent on
Pal says,
FOMC
but overall
volatility,
development of the
you
labour
have bigger
market has been
issues.
positive.
just happened? Oh.
Fed's pal says while inflation is coming down, the price level isn't overall.
Dude, why does... Oh my god. Trading view.
Fed's pal says we are aware of the risks that we would hang on too long on rates. Powell says both mandates are more in balance now. Pal says we haven't worked out if we will follow a threshold-based path for cutting rates. Powell says we have seen real progress on core inflation. And we've seen reasonable progress in non-housing services inflation.
The amount of people that are being punished right now is absurd.
Fed's Powell says, I believe some policymakers did update their forecast based on data from today.
Yeah, you've got a couple on SPY still that can be filled, but we are now at our target on SPY at this 470.70. Need to see what happens. And structurally, you're just going to be watching how we react into this pivot on NQ. Oops. I'd like to see pullbacks to these AV WAPs. But if we just need to just come back down to retest previous structure from this, like, it is what it is. I'll be watching. the most bullish pullback you could possibly get would be the 71.76. Right, like either we're going to just hold these, like we're just trading range breaks and then going for continuation, but ideally we like come down into this. This would be the move that I'd like to see for an actual play structurally.
FedSpal says you need to reduce restriction on the economy well before 2%.
I really don't think that there's anything wrong just waiting. Like having a trade that's completely based off of what JPOW says every 5 seconds just doesn't seem like you have any edge. I could be wrong, but it sounds like you might be at a slot machine. See if NQ is able to maintain here at the 71, or if we need that push down to 57. Going for that ES structure repair now, which I don't mind, and your Russell structure repair. So these are like your first real retests that we've seen pullbacks.
Russell 2000 small cap index, S&P 500 utilities, real estate sectors up more than 3%, each on track for the biggest one-day percent gain since November 14th.
Nice, nice. Really nice retest on NQ from our view up. Need to see that back over 80s for this to matter, or we will continue down.
FedSpal says we think the supply side help for inflation has some ways to run. Powell says we are not talking about altering the pace of quantitative tightening. And the balance sheet is working pretty much as expected.
Huge buy from our view up from the 57.25. you want to risk off until we see that push up. Ideally, we see a retest of 46s on ES before this gets continuation, but nice little reversion there. The reason, let's just go to this. Look at where we are. So we're gonna either bounce here, but we'll find acceptance above this node, or it will push below, right? And then we'll get a structure repair into this. So this edge is fine to play off of because we've seen some structure actually build here. But if we push below and this 57 becomes resistance, we have this node then that will show as our seller node, right? So it's like fine to try to take a risk off of that as like a momentum continuation, but you need to see that push back over the 77, 78, and then a hold of this high, or this just
Powell
is going to
says
come
we are
down to
not at
fix
the level of
this.
reserves when we would need to slow or stop the balance sheet runoff.
And then for like ES, why we care? Well, same general concept. Where we have our node built here, and I would like to see this would be your like most bullish pop, right? If we get below this 46 and it becomes resistance, then we'll have a lot more structure that we can repair.
And Fed's Powell has
down to
ended the
this.
news conference.
Does that make sense? So watch as we come down into this 46 on ES. For your first like real test, this 46 to, I don't know, 49. Right, just this range. But ideally 46. Watch what happens as we come down into this low. We're at our 46 pivot on ES. See if buyers maintain this, or if we get a look below and then that holds as resistance. Until then, you should be looking at this as our potential buyer value at this high, unless we want to do a structure repair back down to this 38. So just look at this as a potential edge. Especially as NQ comes down into the 721. If the Russell can't maintain, then we might need to wait for this to... Ooh, oh, it got a little weird. For this to fix and repair the structure. So just watch as we come in here. This is a good, like, short risk off if you're following our pathing that we drew out. Now we are just waiting to see how much of this we need to fully retrace, right? Ideally, NQ is able to now hold this, is what you're looking for, and then a push back up above. Because again, if this fails, you're looking for this to come all the way down to this 35-38, which is what we are watching for as our next pivot if 46s do not show any interest from buy side. I'll be pretty interested at that 35-38 personally on ES. Solid buy so far off of 38 and our 83.75, and our Russell pivot. Now you need to see if Russell can hold this or if this is going to be that rejection for that continuation down. But regardless, so far, entry with very little risk off of just our structure. Trading back up into our 40s. Later, Adam. Yeah, man. Have a good one. I am risking off here into 46s from 38s. Until we can push above this, this will be my pivot. I told you the plan. I told you where I was interested. I charted it out. We patiently waited. We got our bid. We played off of structure. GG's.
So we're looking now to the early market on close imbalance, currently sitting at 261 million to the buy side.
Nice, nice. Yep. Just waiting for the Russell to find a low, can you imagine? And then testing into our structure on ES and NQ. There's potential for more if we can hold 72 as supportive. We can see a retrace back up to 35. It's your first target. Just looking at our node structure, but need to see this not be resistance here, right? So you're looking for this to bid and then be able to retest, or this is just going to come back down and we'll look for a short continuation under 98.75, back down to VWAP. I have no clue which way we go from there. You long 38s, feeling pretty good. Back into our 50s. This is your next risk off. I just closed one more. We are looking for a look above, and then for this to then hold as support, as we have pathed out here. Russell holding, good sign. Delta pushing, nice continuation. Just move stops up, call it a day. Were people willing to be patient and wait for us to find a structure to play off of? Or no? Nice. Can we just, like, look at that stacked buy signal, man. Holy. It's like the system that I put in place also buys the levels that I look
Early
at.
market on close imbalance
That's crazy.
currently sitting at 598 million to the buy side.
I love it when I talk about a level and then we get one of those and immediate reaction. Feels good, man. Into our next pivot here, this 55 to 57.50 with RTY retesting our highs. So this is kind of a big deal because Russell is basically just oscillating and we are at the top of our oscillation. So as we're into this 55 to 57.50, We need to be very careful looking at, same with our NQ, right? We're at our node, our selling node. We need to see a push above this for continuation. So you could see some chop here if a buyer doesn't aggressively step in to try to squeeze us again. So in like the next minute or so, I'd like to see a buyer really try to slap us out of here. Or this pivot's going to kind of mark this rotation high for right now. Keeping an eye on the Russell. I have one contract left here. Just for the sake of transparency, right? One left. We call this a runner. I started watching Prison Break again for the first time. I'm on like episode 3. I don't know why. I just like randomly clicked it. It's been so long since I've watched that show. Dude, that show got so ridiculous in the later seasons. Like actually out of hand. Oh. Nice. Ugh. Why does it just say no position and no longer shows their P&L? Hmm. Interesting.
So looking again now to the early market on close imbalance, still sitting at 598 million to the buy side.
I can't get over the trading view Dom, man. That thing is just, that's that new tech. That's that future tech. Thing looks so terrible. Jesus. Yeah, need to see the Russell be able to hold this high if we want anything else. We're at resistance, right? Like, this is it. So we can chop here and kind of just like trade between this, this range until we get a break below or above. Right, I don't really have the target. This is the target. I would love to be able to see how many accounts got liquidated live, like in their on their actual like stats as that was happening. That's the stream I actually want. Like, I really hope that, like, if you guys took anything from this stream, it's like, you don't need to trade the degen trade to make money on these kind of days. We can just wait, be patient, look for structure, still get solid trades before, wait for this thing to calm down, and then be set and, like, just do it all over again. Like, I don't... I just... Yeah, man, just, like... Be real with yourself. Guys, like here's my... like, here. Like, yeah, I don't want to upset you. I hate posting, like, P&L shit, but, like, you need to, like, grasp that, like, if you want to make this your full-time thing, or even just be consistent, like, you need to take consistent trades, right? You need to be consistent with yourself, with your risk, with what your setups are. Is your setup trading FOMC? I don't think so, right? Like, come on. These are our current stats. I didn't trade any of that FOMC. We traded before, and then we waited for structure, and then we took the bounce. We put on size at the bounce. We have one loss. $62. Like, please. Just be patient. Play your plan. Like, if there's no edge, there's no edge. I just, like, I'm not your enemy. Like, I'm not trying to talk you out of, like, you know, the greatest trade of your life. Like, I'm here to help. Like, I don't know. Like, I feel like some of you think that, like, you're missing out or something. Like, it just... I promise you I'm not, like, taking the opposite trades behind your back as we talk. You know what I mean? Like, I am here to support you.
So looking now to the market on close imbalance, 350 million to the sell side. So again, market on close imbalance for the NYSE, 350 million to sell.
You are my enemy. I'm sorry, Larry. Ugh. Stream suspended for policy violations. Yikes. Market makers didn't like seeing that P&L. Crazy. They hate the cello, man.